to India Investor Show 2024. I'm your host for the day, Alok Churiwala. I'm truly delighted to stand before you today as we gather to celebrate World Investor Week 2024 under the esteemed aegis of BSE Brokers Forum. This event marks a significant moment in our financial calendar, highlighting the crucial role that investors play in our global economy. Investors are the lifeblood of financial markets. They are the individuals and institutions who provide the capital necessary for business to innovate, expand, and create jobs. They are the driving force behind economic growth and prosperity. And today, we come together to honor their contribution and strengthen our commitment to safeguarding their interests. World Investor Week is a global initiative recognized and celebrated in over 100 countries. It underscores the importance of investor education, protection, and empowerment. It serves as a reminder of the need for transparency, fairness, and integrity in our financial markets. It is a call to action for all stakeholders, regulators, exchanges, intermediaries, and investors themselves to work collaboratively for the betterment of our financial ecosystem. As we gather here today, we acknowledge that the world of investing is changing rapidly. Technological advancements, the rise of digital assets, and shifting global dynamics have transformed the investment landscape. In this evolving landscape, education and awareness are more critical than ever. Investors must have the knowledge and tools they need to make informed decisions. And in a complex and interconnected world, it is that much more important. It was the best of times, it was the worst of times. So said Charles Dickens. But these words resonate more than ever today. The international conflicts on one side that seem never ending, and on the other side, the soaring Indian capital markets underscore what I just said. The BSE Brokers Forum has long been a champion for investor interests. Its commitment to promoting ethical conduct and investor protection is commendable. Today, as we celebrate World Investor Week, we also celebrate the dedication and unwavering support of organizations like BSE Brokers Forum in fostering trust and confidence in our markets. During this week, we engage in several activities aimed at investor awareness, education, and empowerment. In conclusion, let's use the World Investor Week 2024 as an opportunity to redouble our efforts in safeguarding the interests of investors and fostering a culture of financial literacy. By doing so, we not only protect our interests, but also strengthen the very foundation of our financial markets. Together, we can build a more transparent, inclusive, and resilient financial ecosystem that benefits everybody. Thank you, and let us embark on this journey to celebrate and empower investors around the world, for we believe an aware investor is an empowered investor, and an empowered investor is always profitable. With these words, I have the great pleasure of introducing our current chairman, Shri Anup Gupta. Anup is an accomplished director of Sykes and Race India Limited with extensive experience in the financial services industry, specializing in business relationship management, corporate finance, derivatives, and due diligence, with a proven track record in driving strategic initiatives and fostering strong business partnerships. He holds a bachelor's degree in commerce with a focus on accounting and finance from HR College of Commerce and Economics, my college too. Recognized for leadership and delivering results in competitive and fast-paced environment, I hand over the floor to Shri Anup Gupta, current chairman, BSE Brokers Forum. Over to you,
Anup. Good afternoon, everybody. Thank you, Alok, for those kind words. Ladies and gentlemen, distinguished guest of honor, Mr. Vijayant Kumar Verma from the Office of Investor Assistance and Education at the Securities Exchange Board of India, SEBI. esteemed guests, and fellow investors. It is with great pleasure and immense pride that I welcome you all to the fifth edition of Bombay Stock Exchange Brokers Forum World Investor Week 24, aptly themed as India Investor Show 24. This event is organized under the aegis of SEBI and the International Organization of Securities Commissions, IOSCO. Your presence here today signifies our shared commitment to fostering a vibrant investment community. Together, we aim to equip investors with the insights and resources needed to navigate the financial landscape with confidence. As renowned investor Bill Ackman wisely said, investing is a marathon, not a sprint. This profound insight serves as a powerful reminder that patience and perseverance are essential qualities for successful investors. Much like a marathon requires rigorous training, strategic planning, and resilience, investing too demands a thoughtful approach and a long-term perspective. With this mindset, it is with great pleasure and immense pride I welcome you all once again to the fifth edition of the Bombay Stock Exchange Forum's World Investor Week. This event is organized under the aegis of SEBI and IOSCO and signifies our shared commitment to fostering a vibrant investment community. Together, we aim to equip investors with the insights and resources needed to navigate the financial landscape confidently. Let me now bring out some of the importance of investor education. The data sourced from annual reports of BSE, NSE, CDSL, and NSDL highlights the commendable efforts of these institutions in conducting investor awareness programs, popularly known as IAPs, over the past 3 financial years. In 21-22, they did 16,605 IAPs. In 2021, they did 16,605, and in 23-24, they did 24,114 investor awareness programs. And friends, this effort has not gone in waste. The efforts of MIs and intermediaries has resulted in a stupendous growth of demat accounts. The total number of demat accounts as of 24 September is 175 million compared to just 55.1 million in 2021. And as Economic Times reported, the share of bank deposits in gross financial savings of households has fallen to 29.4% from the long-term average of 33%, whereas the share of mutual funds has risen considerably to 6%, which was only 2%. In FY24, individual investors accounted to a whooping 35.9% of the equity cash segment turnover. This translates approximately to 20% of Indian households potentially channeling canalizing their savings into the financial markets, a remarkable shift in the financial behavior. Such tireless efforts of our MIs and intermediaries are crucial in empowering investors with the knowledge and tools necessary to make informed financial decisions, thereby strengthening the overall integrity of the financial markets. As we come together for this important occasion, we reaffirm our dedication to aligning policy frameworks and regulations with the evolving needs of our investors. As we celebrate World Investor Week 24, this year's India Investor Show holds particular significance. In these times of rapid change, it is essential that we remain proactive in addressing the challenges and opportunities that arise in our financial landscape. Our campaign is built upon key objectives aimed at fostering a more informed investment community. We are dedicated to promoting awareness around investor education and protection, highlighting the vital initiatives spearheaded by our dedicated securities regulator, namely SEBI. By focusing on these areas, we can empower investors with the knowledge and the tools they need to make informed decisions in the complex market environment. Today's webinar brings together policymakers, industry leaders, and investors for engaging discussions on future trajectory of our financial markets. We have an exciting lineup of distinguished speakers who will share their valuable insights and experiences, providing us with deeper understanding of the opportunities and challenges that lie ahead. Together, we will explore innovative ideas and nuances to navigate the complexities of the investment landscape. This collaborative environment will allow us to exchange knowledge, inspire one another, and develop actionable solutions that can lead to sustainable growth and success for all stakeholders involved. I would like to take this moment to express my heartfelt gratitude to all the market intermediaries, infrastructure intermediaries, for their unwavering support and collaboration. Our commitment to this initiative is crucial as we work together to enhance investor confidence and participation. A special thanks to our dignitaries who have graciously agreed to speak during our various sessions today. Your expertise and perspectives are invaluable to us and contribute significantly to the richness of our discussions. I would like to also acknowledge the SEBI team for their continued support and guidance. Your commitment to ensuring a robust regulatory framework has been instrumental in fostering a safe and conducive environment for investors. Together, we can build a future where every investor feels empowered and informed. To conclude, I would like to extend my sincere appreciation to the BBF Secretariat for the exceptional work in organizing this event. Your tireless efforts and dedication have made this fifth edition possible, showcasing professionalism and passion for investor education. Together, let us embark on this journey of learning and collaboration as we strive to empower investors and fortify the foundations of our financial markets. As we move forward, remember the words of the legendary stockbroker Peter Lynch, who said, "Know what you own and know why you own it." This mindset is crucial for every investor as we engage in meaningful discussions today. Thank you all for joining us. Thank you, everybody. Over to Alok. Please take the proceedings forward, Alok. Thank you.
Thank you, Anup, for those very inspiring words. I think you've set the tone for the day. One point that investors should take away from Anup's speech that stuck with me, and I certainly will repeat them for you, is keep the mindset of patience and perseverance. It'll see you a long way in your journey in the capital markets. Up next, we have our guest of honor, Shri Vijayant Kumar Verma, General Manager, Office of Investor Assistance and Education, Securities and Exchange Board of India. It gives me immense pleasure to welcome Mr. Verma and give his brief introduction. Mr. Verma is a seasoned professional with over 25 years of diverse experience in the financial sector, primarily with SEBI. He currently serves as General Manager and Vertical Head at the head office in Mumbai, where he oversees Office of Investor Assistance and Education. In this capacity, he spearheads initiatives aimed at increasing investor awareness and education across India, working closely with key market infrastructure institutions such as BSE, NSE, AMFI, BBF, etc. His responsibilities also include analyzing complaints against market intermediaries, developing content for SEBI investor website and the mobile app, and enhancing the outreach of investor service centers nationwide. Before assuming his current role, Mr. Verma headed the supervision, enforcement, and complaints vertical in SEBI Investment Management Department. He supervised inspections of AMCs, PMS entities, registrar and transfer agents, leading to enforcement actions and policy recommendations aimed at strengthening the industry. His efforts also contributed to the automation of supervisory processes, further enhancing SEBI's regulatory capabilities. Throughout his career, Mr. Verma has also served as full-time adjudicating officer at SEBI, where he passed over 600 quasi-judicial orders against various market participants for various violations of securities laws. He has represented SEBI at international forums like IOSCO, playing a key role in shaping global standards for securities regulation. Mr. Verma holds an MBA in finance and LLB and has completed several leadership and judicial training programs. He is known for his expertise in supervision, policy making, and investor protection. Friends, we couldn't have had a better person to be addressing you today. The floor is all yours, Mr. Verma.
Uh, Good afternoon, and thank you so much for your kind words and introduction. Though it took a bit long, but I will try to be as brief as possible. So, warm greetings to all the esteemed guests, investors, dignitaries, and industry leaders present today. And I heartily thank BSE Brokers Forum (BBF) to have invited me on this August occasion of celebrating World Investor Week 2024 under aegis of IOSCO and SEBI. This celebration signifies the need for continuing our efforts at enhancing financial literacy and investor education throughout our country in collaboration with market infrastructure institutions and other institutions like BBF. SEBI's role is to work towards inclusion while facilitating empowerment of investors through investor awareness and education. We believe that a well-informed investor is a well-protected investor. Market structurally carry risk, and SEBI facilitates investor empowerment through awareness and education, not only through physical programs but also through digital content available on the SEBI investor website, Sarthi mobile app, and NISM's free certification course for investors, and of course, through such webinars conducted in association with institutions like BBF. Digital content disseminated by SEBI and market infrastructure institutions include videos, reels, infographics, quizzes, and podcasts created on various aspects of securities market. This digital contents are reaching investors across the country in collaboration with our exchanges and depositories and other institutions. SEBI is very actively conducting awareness and educational programs for investors in collaboration with exchanges and depositories. Regional investor seminars for awareness, what we call RISA, in association with the stock exchanges and depositories. We have conducted more than 30,000 such programs during 23-24, covering around 685 districts and 14.30 lakhs participants. And I would like to mention here that these programs are totally free of cost for investors. And we are also doing programs through our securities market trainers, what we call SMARTs. This was launched in November 2020, and during 23-24, more than 25,500 SMART programs were done pan-India, and 14.5 lakhs participants were covered. We also do visit to SEBI programs for college students, school students. And coming to the theme of World Investor Week this year, the theme is technology and digital finance. In this regard, I would like to mention that investors are central to the securities market, and protecting their interest is a core tenet of SEBI's functioning. SEBI is committed to creating a safe and transparent investment environment, aiming to make the securities market a destination for millions of investors. Technology has facilitated this goal through initiatives like eKYC, ASBA for IPOs, online bond platforms, and a single platform for mutual funds like MF Central. Here, I would like to mention some of the steps taken by SEBI in past 1 year or so in some detail. The Indian securities market was one of the first in the world to move to T+1 cycle. Settlement cycle. Year 23-24 was the first full year of T+1 settlement for all scripts. Shorter the settlement cycle, the sooner the funds and securities are received by the investors. Along with greater efficiency for the market, it also reduced risk in settlement. Going forward, we are moving in the direction of T+0 settlement in near future. We are also perhaps the first in the world to plan and design a safety net to protect investors from serious technical glitches faced by their brokers. The Investor Risk Reduction Access, the IRRA platform, and BBF would be well aware of that, will allow investors to square off their open positions and cancel pending orders in case of serious disruption of trading services provided by their brokers. This mechanism has been jointly developed by the stock exchanges in a strong collaborative mode. In yet another global first, since January 2024, optional ASBA-like facility has been implemented by exchanges. Under this facilities, broker can elect to offer their clients the option to trade in the secondary market while keeping funds blocked in their bank account instead of transferring the same upfront to the broker. This allows investors to continue to earn interest on their funds and also provides enhanced protection to the cash collateral and paying of the clients. The stock exchanges and clearing corporations have provided this facility by integrating the UPI mandate service of NPCI with the secondary market trading and settlement process. To further protect clients' funds and to ensure that these funds are not vulnerable to misuse, daily upstreaming and downstreaming of funds between brokers and the clearing corporation has been implemented. In the coming time, securities payout shall mandatorily be made directly to the client account, giving further protection to investors. So no longer will be saying the days of broker defaults happening and large noise and complaints coming from investors that their funds and securities are not protected. So a lot of these policy measures, supervisory measures have been taken and implemented by SEBI. And coming to public issues, ever conscious that SEBI's most important function is to support capital formation in the economy, one of the areas we focused on was the time taken to raise funds through public issues. The listing timeline for all public issues had been reduced to T+3 from T+6. In the new system, issuers receive their funds faster and investors receive their securities faster, thereby increasing the efficiency in the system. Coming to mutual funds, the MF Central set up jointly by mutual fund industry has evolved as an investor-friendly single window facility to address investors' requirement across mutual funds in India. Since its launch in September 2021, MF Central has served over 2.70 crore service requests, and now I'm sure that this number would be much more higher. And coming to investor protection and empowerment, I would like to mention that investors are at the heart of securities market, and protecting the interest of investors is one of the core tenets of SEBI's functioning. Investors in the market deal with different types of intermediaries and regulated entities. It is necessary that investors have a transparent and convenient mechanism to raise their grievances and disputes, if any, to the appropriate authorities and obtain redressal of the same. The two major initiatives to facilitate such grievances and redressal and dispute resolution have been implemented by SEBI. We have launched and implemented Scores 2.0, which is a SEBI upgraded platform through which investors can submit their grievances in respect of intermediaries and regulated entities, wherein the workflow of handling investor complaints is totally automated with two levels of review. Filing and complaint has been made significantly easier and timelines for the resolution have been reduced so as to resolve investor grievances in very efficient manner. The Smart ODIA, an online dispute resolution system, has simplified the process for taking up disputes in respect of listed companies, their RTAs, as well as investors facing security market intermediaries. Online mediation and arbitration has been made easily accessible to all investors. In line with its vision to build strong institutions in the ecosystem, SEBI constantly seeks inputs from the market participants on what are the challenges that they foresee and the kind of interventions that may be required to deal with those challenges. As a result, SEBI is in process of setting up two institutions for market, both aimed at improving the quality of information provided to investors in the security market. The first is a performance validation agency to validate the claims of performance related to service offered by investment advisors, research analysts, algo providers. And the second one is data benchmarking institution to provide a central repository of standardized and comparable data related to various asset classes, which will be immensely useful for investors and analysts. In times to come, change will continue to be a constant. In order to not just survive but thrive in change, we believe that the best tools to use are innovation and technology. We are fortunate that in that new technologies and skilled manpower is accessible to the majority of our market participants at relatively lower cost than their peers in other jurisdictions. When it is not feasible for individual participants to develop their own systems and issues which are common to industry, participants, industry, and other stakeholders have come together to find solutions which are collaborative and cooperative in nature. The Investor Risk Reduction Access Platform, the Market Security Operations Centers for Brokers, MF Central, are all examples of such industry-level shared technology and shared capital solutions. And the core of all we do as a market regulator is to nurture and maintain a securities market that facilitates capital formation and in which investors can repose their trust. It is our desire to witness the Indian securities market grow in a stature to be a standard setter in the global arena in every aspect of its function. And SEBI believes in a strong philosophy of consultation and collaboration, which I described earlier. And for financial inclusion and democratization of market, SEBI has also taken a lot of steps. Indian markets are undergoing significant transformation in terms of democratization of its services thanks to digitization and technology. Democratization means not just ease of access, but the ease to be served all through the life cycle of investments as well as for exit. A platform like MF Central is unprecedented in the world wherein mutual fund industry collaborated to serve the investors through one single window. Sacitization of mutual fund products through SIPs is another success story of democratization in our markets. We are soon going to witness the 250 rupees 250 SIPs becoming a reality in terms of cost for the AMCs, though many of the AMCs are offering even today by cross-subsidizing even lower SIPs. In today's technology-driven investment landscape, investors should prioritize online security by using strong passwords, enabling two-factor authentication, safeguarding personal and financial information, and verifying investment information found online. They should be really very wary of promises of unusually high returns, stock tips disguised as education, unsolicited investment advice on social media, and ensure they only engage with SEBI registered intermediaries. We are seeing a lot of these incidents happening in our ecosystem, and in SEBI, we receive a lot of complaints in these regards. So here I would like to mention that prevention, the education and information knowledge and prevention is better than cure. So SEBI takes action and we pass orders, but we all know that it is very difficult in such cases since it is unregistered activities to disgorge the money and restitute it to the investors. But never though we are trying a lot, we are taking up with Google, Meta to take down these apps, and more than 15,000 apps have been already taken down so far. And I would like to also mention that securities market ecosystem has seen remarkable growth over the years. In March 2020, there were 2.2 crore unique mutual fund accounts or folios, which has today grown to close to 5 crores, maybe more than 5 crores as well today. In March 2020, number of unique demat account holders was 4.2 crores. Today, this number has crossed 10 crores. At SEBI, we try to monitor how many unique investors access our universe of securities market. That number has now crossed 12 crores. 12 crores people, and this number is growing very, very rapidly thanks to technology and digitization. I think the entire ecosystem, as a whole, whether exchanges, depositories, all kind of intermediaries, clearing corporations, and investors, should take a bow at this remarkable journey over the years. It is setting the foundation to achieve our immense economic potential, because there is no doubt for our country to achieve its great potential, we need capital formation. This means we need to channel the risk money into people who need to raise capital, set up new enterprises, and create more jobs for wealth. This will lead to realize the goal of achieving the status of Viksit Bharat going forward. I would like to mention that financial sector development is closely interlinked with the financial well-being of people, and well-regulated capital market and products create avenues for investors to create wealth in long term. Having said that, there is a huge potential ahead. As I would like to mention a number that we have 55 crores PAN linked Aadhaar today, and as I said earlier, we have around 12 crore unique investors. So the potential is quite huge, but to get there, we have to enhance investor awareness and financial literacy together with all MIIs and institutions like BBF. And the risks in the investments are also there, because no securities market products and markets come without risk. So investors need to be fully aware aspects on cyber security, online frauds and scam, prevention against unregistered advisory, unregistered PMS activities. As I mentioned, SEBI has taken a lot of actions in this regard. So all investor awareness programs are, I would like to again repeat, that conducted totally free for investors. However, investors need to invest their some time and attention in these knowledge sessions organized for them. And as Benjamin Franklin has mentioned, an investment in knowledge pays the best interest. This timeless quote beautifully captures the essence of what we are here to achieve today. Investor education forms the backbone of successful informed investing. It is through gaining knowledge that investors can confidently navigate the ever-changing financial landscape, make sound decisions, and do wealth creation for themselves. Our goal is to ensure that each of you leave today, all the investors, the participants who are going to listen to the dignitaries today, with a greater understanding of the markets, as well as risk management and how to safeguard your investments in a rapidly evolving financial environment. This event is very important to the entire ecosystem, including regulators and institutions like BBF. And along this primary theme of digital finance, technology and digital finance, we are also focusing on the critical areas of fraud and scam prevention and the basics of investing. These are essential for every investor, no matter their level of experience. In an age where digital platforms are becoming increasingly dominant, the risk of fraud and scams have escalated. Being able to recognize warning signs and protect oneself is just as important as understanding the market trends. I'm sure all through the day, the discussions will touch upon these aspects, which are very valuable. The basics of investing will always be fundamental. Knowing how to assess risk, diversify a portfolio, and maintain a long-term vision is key to success in any market condition. These themes translate into some key messages which, as a regulator, SEBI would like to reach to the investors. This is that world over, all securities regulators aim to convey to the investors. This is a list of key messages which has come from ISCO, which has been constructed together with all the regulators working together. It's a list of 18 activities. For the constraint of time, I will not go to these 18 key messages for investors. But the nutshell is that, investors should avoid broadly these 18 messages fall into two categories, two types of errors. One is the error of commission on the part of investors, like they do what they should not do, going after recommendation, tips, or nothing, not following the correct wisdom, and getting duped or scammed by fraudsters. So all these are very important. At least I think that out of 18, 12 recommendations or what investors should not do. And the four recommendations, the key messages are about the basics of investing, as I just mentioned, that investing is a discipline thing. The power of compounding you have to understand, and you have to plan as per investments as per your future goals, and you have to assess your risk. So investment is a long journey, disciplined journey. It's not ball by ball commentary as it is advertised and run on the TV channels every day. And that needs basic understanding of the markets, fundamentals, for those the investors who can help themselves, can read, research, and do the needful, and else they can invest through mutual funds. And they should always consider to consult a SEBI registered financial advisor for their own benefit. So and finally, I would like to thank once again all the dignitaries, speakers, panelists who have taken their valuable time on the weekday to share their valuable insights and experiences. Your contributions will undoubtedly enrich our discussions and provide meaningful guidance to investors. And thank you so much to the BBF Secretariat and Dr. Vispi for their tireless work in organizing this important event. He has been in constant touch with me, and I could understand, I could sense his level of commitment and efforts for making this event a success. And finally, I want to thank each and every one of you for being part of this journey towards a more inclusive, knowledgeable, and empowered investor community. Thank you, and very happy learning today. Thanks a lot.
Thank you, sir. Thank you so much. Thank you. Thank you, Alok. Over to you.
Yeah. Thank you, Mr. Verma. Those were certainly inspiring words. And SEBI's support along the journey of investing will be not only very essential to every investor, but also enthuses the confidence in BBF. One thing we can assure you, sir, is that in your consultative and collaborative process, BBF will stand with you step by step, and you can draw upon our resources, time, effort, energy at every step of the direction, because investors are the raison d'etre that we are here. With this, we thank you very much, and Nilesh Bhai is waiting to join us. I apologize to Nilesh Bhai for having exceeded our first session, but please let Nilesh Bhai in the room, please. I will now introduce Mr. Nilesh Shah, Group President and Managing Director, Kotak Mahindra Asset Management Company. Although Nilesh Bhai needs no introduction, but I must do my duty in doing so. He is the Managing Director of Kotak AMC. Nilesh Bhai leads his team to the Best Fund House of the Year award at all mutual funds where he has worked with. That is Kotak, ICICI Prudential, and Franklin Templeton Mutual Fund. Nilesh is a part-time member of the Economic Advisory Council to the Prime Minister. He is a part-time member of the UIDAI, which is a worldwide success and a case study studied by every business school. He is a member of the Board of Association of Mutual Funds in India and member of COBOSAC Committee of SEBI. With these words, I once again welcome Nilesh Bhai. Nilesh Bhai, at the outset, due apologies for beginning this session a little late, but we have overstepped our session one. But over to you, sir.
Thank you, Alok Bhai. Hope you are able to see the screen.
Absolutely.
Very good afternoon to everyone. And I thought I'll quickly take you through how we see the economy and the market. If we look at globally, there is geopolitical risk of one after another. A theater is opening up. Russia, Ukraine, Middle East, Korea, Bangladesh. All this thing has put risk-off on the table for the global investors. Two largest economy in the world, US and China, are facing their own trouble. US debt दिन दोगुनी रात चौगुनी बढ़ रहा है. It's crossing levels which no country has ever seen. And more importantly, look at the US debt to GDP ratio. It's trading at 35% in 1980, and now it is 125%. So the debt burden of US historically as well as compared to peers is at a very, very high level. The second thing about US is their current political scenario. President Biden as well as Trump has created more borrowing than any other president in peacetime. The only one who exceeded them was Roosevelt, which was facing Second World War. But जो कोई प्रेसिडेंट डेफिसिट और बोरोइंग में नहीं कर पाया, वो बाइडेन एंड ट्रंप ने करके दिखाया है. And in some sense, it is the repeat of the same culture, which means American debt is unlikely to come down. China has a problem of private debt. Their credit to GDP ratio is at a level which is very, very high compared to most of the other people, most of the other countries at the crisis time. The situation in China is fairly stressful to say the least. Without any election, वहां पे भी रेवड़ी बट रही है. The Chinese government has announced cash handouts for the poor ahead of Chinese holidays. With two engines, US and China facing their own slowdown, undoubtedly geopolitical scenario continues to remain on tenterhooks. Within that, India is doing reasonably well on an incremental basis. From low single digit, now we are contributing mid-single digit to real GDP growth. And on a nominal basis, we will continue to contribute double digit. Over next 5 years, our contribution to nominal GDP growth globally will be higher than America. Our challenge is not growth, it is uneven growth. 13 districts around Mumbai, Delhi, Kolkata, Bangalore, Pune, Hyderabad, Ahmedabad, Chennai, Surat, Thane, Jaipur, Nagpur, and Nashik contributes half of India's GDP. Rest 692 districts put together contributes rest of the half. This is our biggest challenge, the uneven growth. Globally also there is uneven growth. About 4% of landmass contributes half of the world's GDP. Always remember, in India, there are three distinct subsets. 1% of Indians living lifestyle of rich country like France. 27% Indians living lifestyle of poor country, a middle income country like Indonesia. And 72% living lifestyle of a poor country like Sub-Saharan Africa, Uganda. We have to move people from Africa to Asia and Asia to Europe, but it's a slow journey. If we look at today's economy, we are well poised compared to all our peer group. The government capex had come down because of election, but it's likely to pick up in the days to come. The infrastructure which we have built is helping improve efficiency. For example, port, which was taking 10 days to clear cargo, has now come down to 3 days. This is helping India increase its share in global goods and services export. Goods export share at 1.8% is quite low. Services export share at about 5% is reasonable. This is an interesting chart. If we compare today's India with yesterday's China, when China was having $4 trillion GDP, India's infrastructure is better than yesterday's China. Our highways are 38% to what China had, even though we are 19% of India's GDP. Across various other infrastructure, India has done well in terms of building the same. Monsoon has been good this season. All over India, it's plenty of rain. In deep tech, India is doing reasonably well. While we are behind China and US, we are keeping pace with Germany and Korea and Japan. Consumption, which was soft in rural and mass market product, has recovered in first quarter FY25, and it has outpaced GDP growth in June quarter. Oil prices, despite Middle East crisis, have remained soft. There is challenge on power front as power consumption is growing in double digit and power capacity is growing in single digit. Unless until some miracle happens, India may witness power cuts in the days to come. Microfinance loans are witnessing stress. Probably there is multiple leverage at customer level. Hopefully, with rural economy doing well on good monsoon, microfinance stress will remain within reasonable limit. Our biggest challenge remains employment generation. 15 to 20 crore people are working in agriculture and farm. They need to be shifted either to manufacturing or to construction or to services. How do we make this transition so that our employment in agriculture is comparable to peers like Brazil, Mexico, Turkey, Vietnam? That will determine India's growth trajectory. The real challenge for India is we are moving from majority government to coalition government. There are certain steps which coalition government can take, and there are certain which they won't be able to take. And they will have different impact on growth. For example, Uniform Civil Code population control bill is unlikely to be pursued in coalition government, but that will have limited impact on growth. Infrastructure investment, Digital India, defense, employment and skilling, fiscal prudence, this will continue to be pursued in coalition government. And this will continue to keep India fastest growing major economy. Things like asset monetization, free trade agreement, and ease of doing business will be truly implemented in Indian style, 2 steps forward, 1 step backward, and hence it may not have as much beneficial impact on growth as we would like. The real challenge for us is how do we bring political consensus on land reform. Everyone wants to sell land at 4 times market price. Labor reform, you can't hire and fire employee, hence don't hire them. Farm reforms, few vested interests have taken subsidies and they want that to continue. Judicial reform, tarikh pe tarikh, our courts are overburdened. Strategic divestment like Air India. Ideally, we should have privatized Air India when it was 100% monopoly in the Indian sky. We divested when it was bleeding after putting 70,000 crore into Air India. GST rationalization and pension reforms reversal. All these steps will have negative impact on our growth. We have to hope and pray what we are doing right now is good enough to maintain momentum. And one day we will have political consensus to actually do the real reform like we did it in 1990. If we can pursue those reforms, we could be next China in making. Look at China's industrial dominance, solar cells, batteries, footwear, electric vehicle, multiple units for speed rail, locomotive, air conditioner. In every segment, China is having more than 50% world production. If we have to reach to this level, we need reforms, which unfortunately in coalition government is unlikely to materialize. In that context of economy where geopolitically things are bad and locally things are looking good, but there are concerns over medium term because of lack of reforms. Equity markets are near all-time high. The question is, where will the market go? Let's first find out where will the market not go. If we look at market cap to GDP ratio at 146%, is well above historical average of 84%. If market has to come back to its historical average, Nifty should be at 16,000, not at 25,000. We think days of Nifty coming to 16,000 is well behind us, and we are not going to see Nifty at those levels. Why do we say so? Well, stocks are slave of earning. Between 2010 to 2020, profit grew from 3 lakh crore to 4 lakh crore, about 33% growth in 10 years. Stock market barely moved from 62 lakh crore to 113 lakh crore. With post-COVID, as telecom losses, oil marketing company losses, PSU bank losses turned positive, profit jumped from 4 lakh crore to 15 lakh crore. Market cap followed. With this kind of profitability, we don't see how Nifty will come back to historical average market cap to GDP ratio. First quarter Nifty EPS was 265 rupees. Earnings season, second quarter is begin on a subdued note with Reliance, DMart, TCS results coming below expectation. Yet there is hope that Nifty EPS will be about 285 rupees in seventh quarter, which means we are well on course to get 1100 EPS for Nifty for FY25 and 1298 expected for FY26. As long as this profit number comes through, we should be fine from a growth point of view, from a downside protection point of view. Valuation-wise, small and mid cap looks expensive to historical average. The stability of market is also coming from domestic investors. They are now setting the tone of the market. In real life, Lagan movie is played between domestic investors and foreign investors. COVID was like one day international. Between March 20 to July 20, FPI sold 70,000 crore worth of equity. Retail absorbed. Finally, foreigners stopped selling. Russia-Ukraine conflict between October 21 to June 22 was like a test match. FPI sold 250,000 crore of equity. Retail kept on buying, and eventually FPI stopped selling. Election day was a T20. In one day, FPIs opened the floodgate, sold 28-30,000 crore between cash and future, but retail investors again kept on buying. This domestic participation gives stability to our market, which gives us confidence to say that days of historical average market cap to GDP ratio is well behind us. FPI's confusion is visible in their flows. एक महीना बेचते हैं, 2 महीना खरीदते हैं, 2 महीना बेचते हैं, 4 महीना खरीदते हैं, वापस 1 महीना बेचते हैं. There are a lot of people who are saying that FPIs are booking profit from India to invest into China. Look at Chinese market, CSI 300. It is up 27% from the bottom, but yet it is trading at a level which was last seen 17 years before. India, on the other hand, is trading at a level which was seen last month. P ratio of India and China, the gap has narrowed down from between 16 to 23. I think India will deserve some premium over China because of governance. Most important thing, while Chinese companies have made profit, their capital allocation has been fairly inefficient. They have diluted themselves so much that now their EPS growth for last decade stands at just 10% compared to India at 166%. Now 10% is in renminbi, 166% is in rupee. But even in US dollar terms on a common denominator, it's not going to make a material difference. In this market, where one should not go, well, there are some counters where valuations looks on the higher side. Both IRFC and HDFC Bank are great companies, but IRFC does appear expensive relative to HDFC Bank. Both BHAIL and L&T are great companies, but BHAIL's PE does look excessive. Both IOB and Axis Bank are great banks, but IOB does look expensive to Axis Bank. We believe some of these stocks have traded at high valuation because of low floating stock. IOB has 4% float in the market, 96% is with President of India. Undoubtedly, on lower floating stock, you can put whatever price and valuation you want. We believe this is the market where one will have to be careful. Unfortunately, there is a correction which has already begun in low floating stock counters. From a valuation point of view, banking trades around historical average. Subject to liquidity coverage guideline of RBI, one can start accumulating banking stocks, especially private sector banks. IT, chemical, pharma, metal is trading around historical average. IT and pharma looks good to invest from current point of view. Chemical is witnessing dumping by China, and companies which can increase their capacity by debottlenecking their plant and become competitive to China will be worth investing in chemical sector. Metal, difficult call, but if China has given stimulus, there may be some upside in metal. Auto, cement, energy, consumer staple, telecom are above historical average, but by a small margin. In telecom, we expect tariff revision, which will be good for telecom stocks. In auto, two-wheeler, rural demand is coming up. So companies focused on two-wheeler in rural India should do well. Inventories have gone up in four-wheelers and in urban India. Those companies may witness some amount of profit booking. Cement has seen subdued growth. But again, companies which are operating in market where there is less competition and more price inelasticity, one can look at the same. FMCG should do well as monsoon has been good and rural economy is on a stronger footing. Capital goods, defense, railway, real estate, consumer durable looks expensive, and one will have to do profit booking over there unless until long-term story justifies lofty valuation. We believe on an average there will be sector rotation from expensive sector to cheaper sector. If I have to paraphrase today's market, it looks like Amar Akbar Anthony movie where there was a song, Honi ko anhoni kar de, anhoni ko honi, ek jagah pe jama ho tino, Amar, Akbar, Anthony. In our market, there is Trivedi Sangam. of fundamentals, corporate profit moving from 4 lakh crore to 15 lakh crore and still rising, those fundamentals support the market. Sentiment, people are positive towards India, and liquidity, both domestic, retail and HNI and institutional investors are investing in the market. Obviously, we'll recommend in your portfolio to have stocks like Amar Bhai, upright, honest police officer, good business, good valuation, and high floating stock. That will be characteristics of Amar Bhai stocks. There are Anthony Bhai stocks also. दिल के अच्छे, but धंधा गलत करते हैं. Valuation expensive, but businesses are fine. I think it will be worthwhile to put more money in Amar kind of stocks than Anthony Bhai kind of stocks. There is SEBI index, which is world's best performing equity indices over last 10 years. We really don't understand why many companies in this index command this kind of valuation. Few companies are exceptional. So be very selective while investing in this index. While we don't expect deep correction in market, we also believe big returns are not possible in the market. Last 5 years has been exceptional. Virtually every other stock has doubled over last 4.5 years. Valuation wise, from 79 stocks trading above 50 PE on Jan 20, now 217 stocks are trading above 50 PE. 4 stocks are trading above 1000 PE. Undoubtedly, profits have gone up, but so has the PE ratio. Over last 4.5-5 years, broad market has delivered 13% return, nothing extraordinary. Over last 4.5 years between Jan 20 to September 24, broad market has delivered about 20% return, looks reasonably high. And 15 years before that, the broad market return was just 11%. We believe days of this kind of returns are now behind us as market valuations are fair. Going forward, returns are likely to be ranging between these two numbers. Clearly, investors are expecting this return or this return, and they are likely to get this kind of return. How do investors adjust that expectation? That will be critical. No big correction, but no big return either. This is the market where you focus on quality over momentum, high floating stock over low floating stock counters, and reasonable valuation over expensive valuations. Market today is discounting everything positive. US Fed, सुबह का भूला शाम को घर लौट आएगा. रेट काटेंगे 2 बार इस साल में, 4 साल अगले साल में. मोदी है तो मुमकिन है भारत सरकार 5 साल चल जाएगी. ऑयल प्राइसेस, नो मैटर व्हाट हैपेंस इन मिडिल ईस्ट, सबड्यूड रहेंगे $80 के नीचे. कंजम्पशन अब इस क्वार्टर में गुड मॉनसून और एग्रीकल्चर के सपोर्ट के ऊपर चलने लगेगा. जियोपॉलिटिकल रिस्क कंटेन्ड रहेंगे, and most importantly, corporate earnings will continue to grow in double digit. ये सारी चीजें होती है तो मार्केट ने ऑलरेडी डिस्काउंट करके रखी है, and it may continue to rise moderately. If any of this goes wrong, of course there will be correction in market, but we don't expect deep correction, we don't expect big correction, because fundamentals, liquidity and sentiments all are together. Small and mid cap as a percentage of GDP looks on the higher side at more than 50%. But do remember that market cap to GDP ratio is also high at 146%. Compared to historical average, small and mid cap looks little expensive. If you are investing in small and mid cap, please be very, very careful about which stocks you are picking and stay invested for a longer term. Our view at this point of time, neutral weight equity, green signal on large cap, amber signal on mid cap, and red signal on small cap. Over longer term, Indian equity will be like Patek Philippe watch. You never actually own a Patek Philippe. You merely look after it for the next generation. The stocks will continue to do well despite occasional ups and downs. On the fixed income side, it is time to go for longest possible maturity or duration. Rates are going to come as Fed starts cutting rates, laying stage for RBI to cut rates. FPI buying will ensure that government supply is limited and well absorbed. Put all together, rates will continue to decline. On gold, we remain bullish. Central banks around the world is like Indian housewife. Gold खरीदते हैं, बेचते नहीं है. As long as central bank buying continues to support gold prices are unlikely to correct. One more reason why gold should remain supportive is because of the interest rate cycle in US. As US interest rate starts coming down, gold prices invariably changes its orbit. Part of it is reflected in the rally from $1,500 to $2,600, but there may be more upside. If I have to summarize, well, global growth is precarious. Rate cut cycle has begun. US Fed, ECB, Bank of China will all be looking forward to support growth. Bank of Japan may continue to raise rates, albeit very, very discreetly. In debt, go for longest possible maturity, as we will see some rate cuts happening. Gold should continue to shine over medium term, subject to central bank buying gold. In equity, please moderate return expectation. While we don't expect big correction unless central fundamentals change, we also don't expect big return as valuations are fair. Large cap looks better from a risk return point of view. FMCG IT should outperform. Chemical and private banks on a selective basis will provide entry point in the days to come. An SME and low floating stock counter, you invest at your risk. With this, I'll end my talk, but happy to take any question.
Sorry, Nilesh bhai, the video is taking time to load, and so is the audio. I've been so intently listening to your talk, and this is generally the best part of the session, where we get to once a year ask you all that is bottled up inside of us and our investing public, who are rapidly listening, and I seem to have got a plethora of questions. Somehow the video is now finally on. There is a lot of talk about AI, crypto, and how are they likely to affect the investing climate, and what should investors be doing in such a scenario?
So, Alok bhai, on crypto, it's very, very difficult to take a call because on one side there are die-hard fans of crypto. On other side, there are die-hard critics of crypto. And there is no fundamental way to evaluate crypto. So my recommendation will be that, many people do a little bit of gamble on a Diwali night or on a Shravan Mahina. So take crypto as that gamble. पैसे गए तो गए, और अगर बन गए तो नसीब अपना अपना. On the AI side, undoubtedly, Alok bhai, it's like normal person fighting Iron Man. Chances of Iron Man winning with the help of the suit is far better than a normal person. It will be fair to say that any fund manager, any investor leveraging AI will do better compared to a person or a fund manager not leveraging AI. At Kotak Mutual Fund, we have started investing in quant, and we are leveraging AI for our analysis, for reading of our balance sheets, for understanding conference calls and transcripts. So AI will become an integral part of how investments will be done. And people leveraging AI is likely to outperform people who are not using AI. Today, I've seen two articles, one by that Homo sapiens person, Yuval Noah Harari, and one by Vinod Khosla, and both are at the opposite end of AI. One saying that AI will destroy civilization, other saying that AI will improve civilization. We really don't know where the truth is. This is an evolving field. But as Mr. Vinod Khosla wrote, all along, the technological advancement didn't improve our intelligence. AI is actually improving our capabilities. It's improving our intelligence. So we'll have to live with what's coming into AI. And whichever way we can get familiar with AI will be very, very important.
Hello, can I take a question, please?
Yes, Anup. Yeah, you're saying something.
Good afternoon, Nilesh bhai.
Good afternoon, Anup bhai.
Yeah, I mean, like, I had just one question, like, with such amount of domestic institutions getting a regular inflow of funds, especially through SIPs, and with the IPOs and all the world looking at India, I mean, like you said, in the future, the markets will give a moderate return compared to what it gave last 2 years. So, I mean, like with so much of capital chasing the same stocks, where, I mean, like, I'm just quite paranoid about what will happen to the markets, in spite of, like the valuations. Yeah, so your views on that.
So, Anup bhai, your point is absolutely valid. We have seen excesses getting committed thanks to liquidity in some counters. But the same counters have also started correcting defense, railway, capital goods, some of the PSU banks. Despite money coming in, have started getting corrected. My feeling is that smart money will move out of expensive stocks and give it to dumb money, and smart money will move into cheaper stocks. Liquidity alone cannot keep market at higher and higher level for long period of time. We have seen that in the 90s, 2000s, 2008. I'm sure same thing will happen. And we have seen, like right now, Hyundai kind of IPO coming, which will take away substantial amount of cash from investors. My feeling is that at some point of time, Government of India may do big scale divestment to raise capital, and that will absorb the demand of investors. At a price, supply emerges. At a price, demand also comes. That's the nature of our market. So that's why I'm saying we don't see deep, big correction. But at the same time, it's better to invest with moderated return expectation, because last 5 years were exceptional. Before that, 15 years is the rule.
Point taken, Nilesh bhai. Thank you so much for your insights. Thank you. Over to you, Alok. Yeah.
Nilesh, this is a world that we are living in is of paradoxes. We are living in the best of times. We are living in the worst of times, as Charles Dickens said. Same for the Indian investor. आईपीओ में पैसा डालते हैं, आईपीओ लगता नहीं है. एफ&ओ में पैसा डालते हैं, वहां 90% खोते हैं. तो बेचारा high incidence of taxation in the Indian context is also against the Indian investor. So what is it that the government of India and others need to do to really address the plight of the Indian investor?
So one, Alok bhai, we have to start educating our kids on finance. आज गुजराती मारवाड़ी और सिमिलर बिजनेस कम्युनिटी में लंच टेबल पे डिनर टेबल पे धंधे की बात होती है, फाइनेंस की बात होती है, एंड वी हैव सीन those community who are business oriented doing very well on investment also. Now every rule has an exception, so ऐसा नहीं है कि हर मारवाड़ी गुजराती सिंधी अच्छा बिजनेसमैन होगा, कुछ फेलियर भी होंगे. So most important thing is education. Unless until you educate people, how will they know? The second thing is, giving experience. Today, all those people who have invested in mutual funds via SIP, when their kids start earning, the first advice given is, beta, beti, ek SIP chalu kar do. The topmost HNI and the bottom end rickshaw driver, ये दोनों SIP कर रहे हैं. Experience is so powerful. The third thing will be distribution. हर किसी को लगता है कि यार everyone is rational about money, but the fact remains that people are most emotional about money, and which is where they need hand holding. That is where distribution comes into play. Today, Alok bhai, FNO में जो लोग loss करते हैं, SEBI data suggests that 90% people lose money. But I'm quite confident that so many people who would have incurred bigger losses have been stopped by the brokers and distributors saying that, bhai, सोच समझ के कर, एकदम हाथ मत जला दे. So the hand holding, a third person who can control the greed and fear of people, that is needed. Between education, experience, and distribution, I think we will be able to create mature investors over a period of time.
Yes, just to add in over there is the fact that, earlier there was a point in time when the investor used to actually ask for advice of the broker. Now they just fire up the app on their mobile phone and seamlessly
Absolutely.
do the trade. So that could perhaps be, sign of the times, but also intervention from our side is not that possible as it once were.
Yeah.
On the ESG theme, much has been spoken about, much has been written about. Fund managers are all very conversant of it and sensitive to it. How do you see that playing out in our country?
So look, by to some extent, ESG has lost its sheen, because when Russia-Ukraine war began, suddenly Western Europe said nuclear power is now green and diesel and petrol are fine, coal power is fine. They changed the goalpost very, very quickly to suit their requirement. Now, from our point of view, governance is most critical. That's what we understand. That's what we can enforce upon managers. Regulator has also supported us by way of majority of minority voting for related party transactions. The second thing is related to social side. Our knowledge is limited, but the kind of promoters and companies we are investing, they are taking care of social ecosystem on their own. We have limited role to play, except that we give better valuation to promoters who have better social spending or standing. It's the environment where we lack resources, knowledge. If I go and talk to a company about carbon emission, he'll put up a PhD in science in front of me and I will come back. More importantly, the goalposts are changing. So my feeling is that the way ESG is evolving, right now, let's focus on governance and social, because that has material and direct impact on company and performance. On the environmental side, we just have to flow with the tide. We can't allow a situation where we don't, make coal-based power and the Western world starts doing it. In fact, many years back, if you remember, ozone layer was depleting with CFC gases. And then Montreal Accord came, whereby Western world, who had used more of CFC gases, provided technology and provided money to go into non-ozone depleting gases. Why can't we do same thing for carbon emission and global warming? We know which countries have emitted carbon in the environment. Let's have a New Delhi Accord whereby this countries provides us technology and also money so that we continue to remain lowest per capita carbon emitter in the world. And people who have polluted environment, they pay a price for it. I mean, there was a one WhatsApp group.
Somehow honest conversations on this are, rarely possible with those in the saddle or in power. There's another talk of attracting foreign investment. How can Indian capital markets strengthen their global positioning to attract more and more foreign investment? We are doing fine on the local. So obviously, as far as education, investor awareness, investor empowerment, all stakeholders seem to be doing their bit. But are we losing out on the share of foreign capital?
Nahi, Alok bhai, the market value of foreigners' investment in Indian capital market is close to $1 trillion. $940 billion equity and $80 billion debt. So it's not that foreigners are not invested. They are hugely invested. And they are invested over here because India provides them growth. Chinese EPS growth was 10%. We were 166%, albeit in local currency. The governance standards of India is far better than most emerging market peers. And valuations are reasonable, not very expensive. So my feeling is that we should just let foreigners be aware of India growth story. We should engage with them because there are so many media which are always anti-India. Abhi like Canada, we recalled our diplomats, but those guys are going and saying that Canada expelled. मतलब झूठ बोलने में इनको कोई शर्म नहीं आती है. And in a social media where people end up putting fake videos and fake narratives, so we have to just engage with foreigners to tell them the truth. In India, whatever you say opposite is also true. So कोई बहुत bearish है इंडिया के ऊपर तो हमें उसे थोड़ा bullish करना है. कोई बहुत bullish है तो उसे अपने को थोड़ा break लगाना है.
Very well said. Very well said. So well said.
There are a lot of youngsters that are joined us on this program today, and possibly would be the types who are also, beginning to take their first steps into investing. Something that you would directly say to them, because words coming out of your mouth are latched on.
So Alok bhai, same चीज कहेंगे. Trading is injurious to ordinary investors' health. Be an investor, not a trader, unless until you are very, very disciplined. Second, participate in India growth story by buying good companies run by good managers at good prices. बोलना एकदम easy है, करने में जान निकल जाती है. But if you take a longer term view, you will be able to separate noise and you will be able to invest in companies which have generally good business model, return on equity more than cost of capital over a cycle. Good managers have vision, execution, and concern for minority shareholders. And valuations are subjective. India today looks at a premium on a 1 year forward basis, but on a 10-year forward basis, it is the cheapest emerging market. So take your call on valuation, but try to buy 3G, good business, generating more ROE than cost of capital, good managers who will not take you for a ride on governance, and good valuation depending upon your time horizon. But be an investor, not a speculator.
To all the youngsters out there, this is underscored very clearly. Be an investor first. Trading karni hai, karo only to that extent that you can lose. How does an investor, a lay investor again, cut out the noise? You mentioned cutting out the noise. There's so much flow of information coming from all around us. Good, bad, ugly, true, fake. But what is it that an investor should read, listen to as primary sources of information?
So one, Alok bhai, read the balance sheet. Look at the analyst presentation put up on company website. And then form your hypothesis as to why you are investing in this company. If you can put 3 or 4 points on a piece of paper as to why you are investing, that's more than sufficient. फिर जब भी कोई noise आए, जब भी कोई news आए, जब भी कोई बात आए, look at whether it's impacting your hypothesis. If it's not impacting your hypothesis, stay invested. If it is impacting your hypothesis, then you can take corrective action. By creating an anchor for your investment, you will be able to withstand choppy seas. Seas will be choppy only. Your anchor has to be strong enough so that you can survive the choppiness.
A follow-up question to that. How long does one follow a bad investment? I have made a hypothesis. I have the 5 points. It's not going my way. How long should I hold on to it? And what is the time to cut the loss?
So, Alok, by moment you realize that your hypotheses are going wrong, it's time to exit. Now, will your call always be correct? Answer is no. Sometimes we know liquidity can pull up a bed ship also far higher. But my recommendation will be, see, takdir hai, to paisa kahin se bhi ban jayega. We can't fight against that. But in a without luck wala investment, moment your hypothesis goes incorrect, that's the time to book your loss and move on. People, book their profit and let their losses run. It's exactly opposite which is needed.
Okay, now for the final question of the day, आपके हाथ में एक अलादीन का चिराग दिया है. You have 2 wishes of the finance minister. What will those 2 wishes be?
So one, Alok bhai, I'll recommend let's push the reforms. India should not become middle income trapped country. And strategic divestment, GST rationalization, pension reforms, FTA negotiation, ease of doing business, these are all doable things. So let's first focus on reforms so that India goes to next orbit and doesn't get trapped in middle income leg.
You named about 7 or 8 reforms. Which 2 would you hope for? Or each one is equally...
सब करना पड़ेगा.
सब करना पड़ेगा. Okay.
Because लैंड रिफॉर्म नहीं करेंगे तो उसकी इम्पैक्ट कहीं पे आएगी, लेबर रिफॉर्म नहीं करेंगे तो कहीं पे आएगी, जुडिशियल रिफॉर्म्स नहीं करेंगे तो कहीं पे आएगी. सो ऑल दिस रिफॉर्म्स आर नेसेसरी एंड वी हैव सीन लाइक 90s में रिफॉर्म किया तो अपनी ट्रेजेक्टरी बदली, 2014 में रिफॉर्म्स और एक्सेलरेट किया तो ट्रेजेक्टरी बदली. वी हैव टू कैच अप विद चाइना व्हिच वाज एट सेम लेवल एज अस इन 1980. वो चेंज तो तभी कर पाएंगे जब हम रिफॉर्म करेंगे.
Fantastic. So reform or perish, that's the
absolute
mantra. And with this, we'd like to thank you so much, Nilesh bhai.
Thank you so much, Nilesh bhai.
We won't let you go without
Thank
extracting a promise out of you that next year again, same place, same time,
Definitely.
we'll have the pleasure of educating our investors. Anup is saying something. Yes.
Thank you so much, Nilesh bhai, for joining us and giving your deep insights. It's always so interesting and so engrossing to hear you. It's not only education to our investors, but also people who are in the industry. Thank you for being a stalwart of understanding the markets globally and the Indian markets and the Indian investor. Thank you so much, Nilesh bhai.
Thank you.
Thank you so much.
Bye.
Friends, with this, we now come on to our next session. This is session 3, Squarely Capital Markets in Focus, Uncovering Opportunities and Managing Risks for Modern Investors. The discussion points herein will be economic uncertainty, technological advancements, regulatory changes, sustainability and ESG, factors regarding market volatility, investment strategies, and we'll talk a little bit about fraud prevention as well. So up next, we have Mr. Kushro Balsara. Gives me great pleasure in introducing Kushro. Mr. Balsara is the Chief Risk Officer of BSE Limited. He's also responsible for the enterprise risk management of BSE. He heads internal audit, security, and investors protection fund of BSE. In his 34 years of work experience, he spent over 28 years with BSE and has rich experience with several departments of the exchange, such as surveillance, inspection, clearing and settlement, debt, derivatives, and mutual fund business. Is there any department that you've left? He was responsible for setting up the exchange's popular mutual fund platform called Star MF in 2009. And since 2000 to 2020, he was heading the listing compliance and legal regulatory departments at BSE. While heading listing compliance, he has represented BSE and spoken at several OECD events on corporate governance. Mr. Balsara is qualified chartered accountant, cost accountant, company secretary, and LLB. With this, I hand over the floor to you. Over to you, Kushro.
Thank you. Thank you very much, Alok. Can you hear me clearly?
Absolutely, loud and clear.
Yeah. So you want to welcome in all the panelists and then we start?
We'll do it one by one. You can begin with your presentation. Of course, the other panelists are all here listening to you, but you can go ahead, please.
Sure. So thank you very much for this opportunity. Thank you, BBF. Thank you, Anup, and thank you, of course, my old friend Alok. So it's a pleasure to be back here on India Investor
Hi,
Show.
Kushru, always a pleasure to see you. Kushru and me, we have a long association from our school times. So that's Kushru.
Okay. That is something I didn't know. Huh?
Yeah.
But good as a compliance and this thing, good that he has done the disclosure.
So basically, one of the main things that worries us in the Investors Protection Fund, I head the BSE Investors Protection Fund. And one of the major things that worries us is spreading financial literacy amongst investors, as many investors as possible. And one of the biggest issues that has come to fore very recently is the spate of cybercrime which is happening, where people are losing millions and millions of rupees. Either through, I feel that there are basically just two major factors which make people go for this and lose their money. One is, of course, the fear, and the second one is greed. So these two are two very, very basic emotions, human emotions, which play a very large role in us tending to fall for these scams and losing our money. Very recently, in fact, we on last Saturday, we did a mega investor awareness program in Indore with SEBI and with all the other MIIs. And we had the Assistant Deputy Commissioner of Cybercrime Police Indore who addressed us. And he came out with something which is very interesting, which I would like to share and which I was not aware of personally. So I thought I'd share it with our august audience and our lovely panelists. So he mentioned about a big scam happening where these scamsters pretend to be, they say that your bank account has been illegally used for human trafficking, for drug peddling, and you are in serious trouble and you have to join us on a Zoom call. So they take that person or they call him and they do a Zoom call, and there is CBI and stuff like that and all in the background. And it's a very, very elaborate hoax, very, very elaborate scam. And there's a guy in police uniform. So he is handed over the screen and then he says that आई एम सॉरी, लेकिन आपके अकाउंट में ये सब चीज पकड़ा गया है, तो हम अभी आपको डिजिटली अरेस्ट कर रहे हैं, एंड आप यहाँ से हिलेंगे नहीं फॉर द नेक्स्ट 4 to 5 hours. You have to sit here until we tell you you can go. You can't go to the toilet, you can't go and drink water. You have to just sit in front of this, otherwise we'll take severe action on you. So that guy got so badly worried, and he kept on answering. They went round and round asking the same questions over and over again. And they finally said that, देखिए आपका अकाउंट तो अभी फ्रीज हो गया है. They came to know that recently he had redeemed some of his mutual fund investments to set up another plant elsewhere. This was the very well-known company, the CEO of the company, MD and CEO of the company. So they said you have to transfer the money to XYZ designated account that we are giving you. आपको ये आधे घंटे में कर देना है ट्रांसफर. हम एक बार तहकीकात करेंगे पूरे केस की और बाद में ये पैसा आपको लौटा देंगे, अगर इफ यू आर फाउंड नॉट गिल्टी. बट ये तो हमको करना ही पड़ेगा. And he transferred about 7 crore rupees to that account. And these guys just, then simply they did some more thing to fear, make him get afraid, and then they vanished. And luckily he mentioned this to his office staff, and they said कि सर ये तो आपको बड़ा स्कैम किया है, डिजिटल अरेस्ट जैसा कोई टर्म ही नहीं है. So they spoke to this assistant deputy commissioner of police cybercrime. He said, sir, digital arrest जैसा कोई चीज ही नहीं है. There is nothing like that in law. So you have been gypped, you have been scammed. And then they started their inquiries and stuff like that. They got the recording, and somehow they managed to trace and get back 5 crore rupees for this gentleman. So I mean, the kind of extent to which these people go with their crimes is simply unimaginable. So 2 3 things which investors really need to be careful of and to avoid is, especially the people who are in the who are with advanced age, and who tend to get afraid because they do not know technology. So we are now celebrating World Investor Week, Monday to Sunday, and there the SEBI has very fittingly put the topic as technology and digital finance and how they help you in investing. So this is something which is a very powerful weapon, technology and digital finance, which we should use. We should ride the tiger instead of the tiger riding us. So that is very important. Don't get scared of technology. Don't get scared of this coming online or doing stuff. But at the same time, exercise restraint. Don't click on any links that you receive in SMS. If somebody starts threatening you about something, first do some uh, check out whether it is genuine, not genuine. Talk to other people. Don't feel scared कि अगर मैं किसी को पूछूंगा तो वो मुझे उल्लू समझेंगे, या फिर मेरी they'll find out my secrets or something like that. Talk to somebody reliable, somebody close to you, and share it so that, and if possible, escalate it to some senior authorities, police authorities, etc., so that if you're being scammed, you know straight away that this is something you should not go for. So I think this is one absolute very big thing that we should be on the lookout for. uh, I just have these opening remarks. Thanks. Over to you, Alok. You're on mute, Alok.
Sorry for that. The way we'll go about it is that I have certain questions that are coming in as you were talking. So I'll address the question to you after your talk, and then we move on to the next speaker. So based on
Sure.
the question goes as follows: based on extensive experience in various departments of BSE, what measures can be enhanced or introduced to strengthen for fraud prevention and boost investor awareness?
You want to go ahead or you want to?
So that's the question. Now over to you.
Okay.
Yeah.
Yeah. So for us, financial literacy is one of the biggest things, because even as I mentioned about our mega investor awareness program that we did, our theme was Shikshit se Viksit. Now, Shikshit doesn't mean that you get 5 10 degrees, you're an MBA or you're a PhD or something. Shikshit here refers to financial literacy. If you are financially literate, then you can grow, you can become more Viksit. And all of us becoming Viksit leads to a Viksit Bharat, of course. So the important thing is that you should be aware of uh, how to use your finances, where to invest, And the most important fact is you should start investing. A lot of our young investors that we meet with nowadays, we've seen that people are very young investors are joining are coming in the UCC or unique client code, which is registered with the exchanges, which is really magnified. So what is important for them is to not be reckless, to be aware of where they are investing, do a little bit of research. Today, with the kind of technologies that we have around, your information is available. Earlier you used to go to websites and stuff. Today information is in your pocket, in your mobile phone. So make the maximum use of that, access use technology in the right way, use digital finance methods in the right way, so that you don't have to do this paperwork and stuff like that, and use these mediums to learn more about how to invest, where to invest, start investing early, start doing your compounding is one of the biggest and best things that has happened in the financial markets. So use that to grow your wealth responsibly. Other departments also, I mean, so in IPF, our main thing is, of course, with financial literacy. We have recently started a department called Social Stock Exchange, where people who want to contribute to improving society can do so. They get the 8IG benefit for the income tax also. So that is also something where we are trying to improve society at large, with focus on children's education, children's welfare, health, etc., etc. So that's it from me, Alok. Thanks.
Thank you so much. Thank you. And our next speaker is Mr. Satish Ramanathan. Is he in, Ujjwal? I can't see him on screen.
He hasn't joined right now.
So while Mr. Ramanathan joins us, I'll give a brief introduction. Ujjwal?
I suggest you move to the next speaker. And then
Okay. So since Mr. Ramanathan is not yet with us, we'll move to Mr. Amar Ranu, who's the head of investments and insight at Anand Rathi Share and Stock Brokers Limited. A very warm welcome to you, Amar, and a brief introduction about Amar. With nearly 17 years in product and advisory role, excels in private banking sector, analyzing investments for HNIs, family offices, and corporates. He's honed his skills at Centrum Wealth, L&T Finance, Wealth Management, and Motilal Oswal. Adept at both finance and writing, he's contributed to various newspapers. With a BE from Nagpur University, MBA from IIT Dhanbad, and PG in Securities Market Program from NISM, Mr. Ranu navigates financial complexities seamlessly. As head of investments and insights, he meticulously tracks market trends, ensuring superior client performance. Beyond finance, he is an avid ultra trail runner and budding triathlete. Wow, that's how most investors should be, going for the long run, displaying discipline and dedication. Over to you, Mr. Ranu. Floor is all yours.
Thank you, Alok. Thank you so much. And thank you, BBF, for having me. So when we speak running and triathlon, but before that, I would like to talk about India, though Nilesh Bhai has covered a lot of things, and but I still like to give a moment where we believe that India is at very decisive moments, and especially for the modern investors, especially for the young generation with wide range of opportunities. But that also requires astute risk management. So various landscapes like economic uncertainty, investment strategies, regulatory shifts, or market volatility, and the last not the least, technological advancements are the key factor which we look into. So explaining a little bit on that, on the regulatory thing, we see that the regulator, especially the SEBI, is bringing a lot of swift regulatory changes, and that's to protect investor interest, also bring a lot of accountability in corporate governance and also market disclosures. In one way, they are also helping us in level playing field for all market participants. Coming on the investment strategies, uh, beyond the traditional, equity and debt products, new asset classes like AIFs and the PMS in the new version, we have seen a lot of traction, especially the new one which has come, the new asset class also. And especially on the mutual fund side, also a lot of niche categories have come into, like factor investing are gaining traction. So a balanced portfolio involving these asset classes, along with traditional products like MFs, are still the core holdings, and believe that it can provide a hedge against market swings and enhance overall return. Coming on the technological thing, we believe that there is a rapid advancement in technology, and that is revolutionizing the capital market, as we have seen. A lot of other people have, speakers have talked about that. A lot of artificial intelligence, blockchain, and now a new term which is becoming the talk of the town, though India is still in the early stage to see that, tokenization of assets. Along with that, robo-advisory firm or fintech firm have revolutionized the investment landscape and democratize the investment opportunity. So when we compare this, a lot of people ask me if I am, what is the philosophy I apply in investing, and being an ultra trail runner and triathlete, I believe that my journey through endurance sports has definitely shaped my professional life, and the same principle of discipline, preparation, resilience, and that's part of an essential part of athletic pursuits. It drive my investment philosophy and also client relationship. And we believe that in fact, personally believe that in endurance sports, success is built over time, and that's through consistent training, overcoming challenges, and dedication to long-term goals. So similarly in investments also, I believe in strategy that prioritize steady growth over quick wins. So there are a lot of people or investors who are looking for quick gains rather than building the gains over a period of time. So that's maybe possible over a period of some time, but it may not be possible every time. So I believe that any discipline strategy that prioritize steady growth over quick wins, that would be the trend, and that will follow it. Especially in the running, when the distance is more than 100 kilometer or 160 kilometer, one do not abandon the race just because it's a difficult segment. Similarly, for clients also, I guide them through market volatility or emphasizing patience and long-term perspective. So this is what I want to say, which is it has helped me as a investment for the clients also. And definitely it requires meticulous planning, preparation, and adaptability to the different market conditions. Thank you.
Question for you is, as an ultra trail runner and budding triathlete, how do the principles of discipline and dedication from your athletic pursuits influence your investment philosophy? Part of it you've already answered, but what keeps the motivation going? Because when the chips are down or when the trail is tough, it's so easy to give up. And what just going on in your mind at the time?
Okay, so I believe the kind of preparation you do, and it's not like you are running. So there are difference between trail running and road running. And in trail running is a no man land, where you are on your own. You strategize yourself. Definitely, you put your training also. And this is the endurance sports, because it's not like one hour, 2 hour sports. Similarly, the same thing applies to the investments also, where you customize the strategy for each of the client goals, and definitely that requires preparation and also adaptability to different conditions. When I'm saying adaptability to different conditions, investors should also be ready that whatever the market conditions are, they should be ready to see the long-term goal rather than short-term goals. I know there are a lot of clients who gets panicked in terms of if the market even comes down by even 2%, 5%, or even 10%. Definitely, that's the kind of panic they see. But at the same time, we believe that staying agile in response to market shifts is the key to make the market. And ultimately, whether it's crossing the finish line after a grueling race or helping the clients achieve their financial milestones, our focus, or in fact, my focus remains on persistence, adaptability, and continuous improvement. It will not come over a quick period of time, but it will come over a time. And we believe that this is a journey one should embrace in all aspects of life, whether in the world of investments or in the world or in the endurance of sports.
Question that is prioritized to forecast potential investment opportunities.
Yes. So, see, when I say the market has become very dynamic in the current world, and gone are the days when you just take a backward-looking approach. It's a more of both data-driven analysis and the forward-looking intuitions. So when I say this, it's a combination of couple of factors. And I would take a moment to explain how we analyze for our clients or for our investors. And it's a combination of factors. To start with, let's suppose macroeconomic indicators, whether it's a GDP, inflation rates, or interest rates, or the unemployment figures, which are the key to understanding the broader economic environment. And this helps in forecasting how fiscal and monetary policies might influence asset classes. Apart from this, earning and valuation trends, and especially the corporate earning and valuations, are crucial in assessing the strength of the individual stocks or sector. And various factors like earning revisions, P ratio, or cash flow, I help or I gaze where value lies in increasingly competitive market. There are different other factors also, like market sentiment and behavior data, like the volatility index, investor surveys, or fund flows, which we are seeing at record time high at present. This also provides insights into the psychological factors driving market movement. It's not only the domestic factors. In fact, the global factors also are taken into consideration. So different geopolitical trends, from trade negotiation to regulatory changes, are crucial in understanding the potential market risk and opportunity. And the last not the least, there are technological and industry specific trends also, especially as we believe that innovation is often a driver of outsized return. And we focus on disruptive technology and the sectoral shifts that helps in redefining the industry. And we believe that fintech or clean energy or AI or financial assets or related sectors are continue to do well. So the market is dynamic, but I believe that with a structured approach to tracking trends and a keen to see when to pivot, this helps me in navigating the complex market and deliver consistent return to my clients. Thank you. You are on mute, Alok.
Thank you, Mr. Ranu, for the investing 101 that you have so succinctly encapsulated. The advice to investors there is think long term, get your basics right, look at primary data, you can't go wrong.
Yeah.
Up next, we have Mr. Ayush Agarwal, Chief Investment Officer, SMC Private Wealth and Director, SMC Group. A brief introduction about Mr. Agarwal. He is a young and dynamic leader who has established himself as a visionary with a profound impact on the financial markets. He's been managing and heading portfolio management services at SMC Private Wealth, where he ensures that every SMC client benefits significantly from his practical and pragmatic views. His MBA degree from SP Jain Institute of Management and Research, Mumbai, has helped him in gaining an in-depth understanding of the various macro and micro factors driving the economy and financial markets. Mr. Agarwal has developed a keen eye for identifying high growth as well as fundamentally strong companies. He has, from time to time, addressed various platforms through his interviews in various media. Under his able leadership, SMC SEBI registered PMS growth scheme returned a CAGR of 30% for the last 3 years, as on 31st March 23. Other than his professional accomplishments, Mr. Agarwal is also well known for his warm and approachable demeanor, making him a favorite amongst his colleagues and clients alike. His passion for his work is infectious. He brings genuine enthusiasm and energy to everything he does. Looking forward to your views, Mr. Agarwal. Welcome.
Thank you. Yeah, thank you so much, Alokji, for the wonderful introduction. And congratulations to BBF for such a wonderful webinar. And, it is investor awareness program. So I believe it is very important that, everyone can do investing in stock market. But what is important is one learns through these events. So
Absolutely.
I will be talking on purely, investor psychology, long-term investor psychology. So in movies, we say entertainment, entertainment, entertainment. But in investing, I say risk management, risk management, risk management. So if you are able to manage risk in your portfolio, देखिए market तो बढ़ेगा ही, but what you have to see is कि जब market गिरता है, how you save yourself from, how you outperform the market or save your money from falling. Because
Sir,
if
may I interrupt you here?
yeah,
ज्यादा रिस्क बोलेंगे तो कस्टमर भाग नहीं जाएगा, बोलेगा ये तो बड़ा रिस्की जगह है.
ये फैक्ट है जी, ये फैक्ट है, ये रिस्क की जगह है. So you have to be a risk manager. मतलब people say you are a portfolio manager. I tell them I am a risk manager. So protecting risk is the must. So how to do it? I will share some strategies on that. So one is avoid overexposure to any individual stock, be it sector or be it a corporate group, because you don't want to be slave of one company, one sector or one corporate group. So that is first key. By do not overexpose in one company. Then very important part of risk management, which I believe is avoid illiquid stocks, because when things go wrong, there's no volume in the stock, you will not be able to get out. So for any investor, if you are investing in stocks where there's very less volume, you are again a slave of that stock, because you won't be able to get out if things go wrong. And then you have to do everything to have a good risk management policy. So stress test your portfolio. See how your portfolio would have performed in COVID times when the market fell almost 30% in 1 month, that is from in February 2020 to March 2020. Market Nifty fell 30%. So see, there are tools online available where you can test how your current portfolio would have performed at that time. So do stress test on your portfolios. Then again, one important fact is that keep at least 5 to 10% cash in hand. You should always, because when risk comes, it won't tell you, it won't give you a warning. So you have to be ready with some at least 5 to 10% cash in hand, so that you can capitalize on the good opportunities available. And see, youngsters nowadays, because after COVID, market has given humongous returns. So they expect ki, I want to get 30% returns and such kind of returns. But what I believe in long term, if you can consistently outperform market, even slightly, you will make big money in long term. And one example I want to give with that is, like we were just assessing our performance on the fund. So we found that in last 4 years, the CAGR returns Nifty had given was 23%, and our fund has given 27% CAGR return. So if you look at plainly, it looks only 4% CAGR difference. But when you see it on an absolute basis, it is 30% outperformance, 30% outperformance in terms of absolute returns. So 100 has become 260. If you see the 27% return, and 100 has become 230. That is 23% returns CAGR. So it's in absolute terms, it is a 30% outperformance. Though if you see it is only 4% CAGR. So even if you slightly outperform the market in long term consistently, you are definitely making big returns. Then I believe, see, we can be great. We have good knowledge. We can, and information is available everywhere. So I would rather stress on the part of soft skills. So how how mentally you are prepared to the volatility in the market. How you should know yourself. Other than anything else, you should know your weaknesses. You should know your strength. If you are someone who panicked, I mean, if you are someone who bought the market during the election exit polls, and you sold during the election results, you are out of this market because you don't know what you are doing. So it is very important to have the short side controlled, soft skills. So that is another point I want to share. Then again, like Nilesh Bhai told, that for any investment decision, keep it on a paper, write it on a paper, small paper, and you should be able to explain it to a 10-year kid, why you are buying it. Because if you can't explain it, then you don't know why you are buying it. And again, when you buy, just think just have a thought process that if the stock price falls 20% post my buying, and the reason is not because of the stock, but because of COVID or any other macro factor or any other reason not related to your company, would you still add on it? If your answer is no, then you should definitely not buy it even at this price, because it means you're not confident on the stock. I think due to less time, I would cut short here, and yeah, I would continue. Yeah, thank you so much.
We have the liberty of time, not to worry. So that if there is something that you would like to say, we have the liberty of time.
Okay.
So you can please continue, sir.
Sure. Perfect. So again, just like I told you that before buying, have a clarity why you are buying, and do I say pro mortem of the stocks you are buying, and similarly I say post mortem of the stocks you buy. I mean, whatever mistakes you are doing, it is very important to analyze where you have gone wrong, and how can it benefit you in the future by learning from that mistakes. So I think that's it. These are the points that I wanted to share.
So question for you, sir, is how do you ensure principles that you espouse are effectively communicated to your clients?
See, it is the portfolio. Ultimately, if you're building a great portfolio and your client is can see the portfolio, then it is more than client is ultimately satisfied. So it is the portfolio. Ultimately, it is the returns. If you are able to get your returns, if the investor is happy with the returns, and there's a, like, we clearly share how is the portfolio built, what are the risk management strategies that we have put in. So whatever I have told you, I tell to the clients, and then they are more than happy with it. Yeah.
Perfect. So as far as if we were to write 5 points for the India story on a piece of paper, for you, what would those 5 points be?
Sure. So I think 5 points is that Modi happy. That is most important. Then I would say that India is a growing country, is a growing economy, and see, India has always been good, but the problem was that developed markets were doing better. US was doing great, China was doing great, but today, if you see, they are not in good political space or even economy wise. But India relatively is doing much better, and even future looks very bright for India. Then I would say very important point here that the market capitalization of two companies in US, that is Microsoft and Apple, the combined market cap of only these two companies is more than the market cap of all listed Indian companies. Combined market cap of all listed Indian companies. So we know what potential India has if it does good. It is very less when we compare to America. And again, so India is a very bright spot, and there's no reason why one should not invest in India. And as Nilesha ji said, that FI has come and go, but so they are buying even at the top. So you can understand the potential of Indian markets. Yeah.
Yes. Thank you so much. We are now joined by Mr. Satish Ramanathan, Chief Investment Officer, Equity, JM Financial Asset Management Limited. A brief introduction about Mr. Ramanathan, an investment management veteran with more than 3 decades of experience, including a decade of research experience on the both buy and sell side of the equity markets. BTech Mechanical from IIT Madras, or shall we say Chennai, MBA in Finance from A&M University, Texas, USA, and he is a certified CFA. He has previously worked with ICRA, ICICI Securities, Franklin Templeton as a fund manager. Worked in a serial role with Sundaram AMC as Director Equity and fulfilled his entrepreneurship journey through Tattva Capital. Over to you, sir.
Thank you, Alok. Thanks for having me on board. Can you just repeat what the question was? I joined a little late, I'm sorry.
No problem. So we are generally talking about investments into the Indian markets and investment by youngsters. The theme, of course, topic of discussion that we are talking is, you can address any points: economic uncertainty, technological advancements, digital finance, regulatory changes, sustainable ESG factors, market volatility, investment strategies, fraud prevention, any of these.
Okay, perfect. So I think one of the things that I've learned during the journey of my investment journey is that one has to be always open to new ideas and new themes that are developing. So it is FMCG versus modern retail versus quick delivery. So the way the market is changing so dynamically, the industries are changing, the stocks also move ahead and try to innovate and catch up with the change. So in our portfolios, in our portfolio management process, we are always worried about obsolescence of the portfolio. So today you have a kind of a online digital platform which can theoretically make direct sales people obsolete. You have banks which can run digitally, which can make the branch network obsolete. So when you have a large population of youngsters coming on board and you see them operating on the telephone seamlessly, whether it is semi-literate, literate, across languages, because the OS has become so user-friendly. The basic thing that we worry about is what happens to these old granddaddy companies. And granddaddy companies are trading at valuations which are high because of the equity market being where it is. But the innovator companies can actually push many of these older companies back by a step or two, which means that the earnings growth of the older companies can keep coming down, whereas newer companies can keep increasing year after year after year. This has been seen across industries, across companies. So what we actually try to do is the entire team's focus is that are we missing a new trend, new theme? Case in point, broking. Case in point, the way you make your payments. Case in point, your retail, how you purchase goods. So all of these things are changing so dynamically that we need to be very, very careful in investing. It is not the older strategy of buying and keeping it for 5 years, 10 years. That strategy doesn't seem to work because the disruption in technologies are so rapid. So you buy an auto ancillary company, EV may disrupt it. You buy a retail company or a brand company, online brands disrupt it. So there is always disruption and there is always change. So one has to be aware of this and capture this change element in your portfolio.
About this natural question that when do you retire? How early in this process of disruption do you get rid of the granddaddy?
So I think, see, the granddaddy can also innovate. In fact, we wrote a piece last month where we said that large companies have always the flexibility of a big balance sheet to change course. But sometimes they forget or fail to see the change on the wall, the writing on the wall, and they do not change quickly enough. So if that is the case and you don't see change taking place quickly enough, I think it is time to retire the older stocks and buy into the next newer generation businesses.
A disruptive technology being disrupted can also happen. For instance, ICE being replaced by EV, being replaced by hydrogen, being replaced by something else. So,
Right.
so how does one play that transition out?
So, in the case of hydrogen and all of these other aspects, the cost efficacy is yet to be established.
So I'm using this only as an analogy, and I'm not pointedly. So yeah.
So during the technology disruption, there will be a lot of alternate technologies coming in, and that is what I think Ayush also was referring, that volatility is part of innovation, and innovation creates volatility. So it's a aspect that markets have to get used to. So depending on the investor profile, if the investor is happy saying that I will get FD plus returns with the older generation stocks, they should probably stick to that set of stocks with lower volatility, lower innovation quotient, etc. On the other side, you have the hyper growth stocks where youngsters may want to invest because they are willing to take that risk. And if you see the disruption that we have seen between large caps and mid caps and small caps, I think that is also clearly pointing to the stage, to the situation that India is facing today, because you have college graduates who are innovating, who are creating a company, coming either through the SME or floating a new business, new stock, which comes into the small cap, which can grow theoretically at a much faster rate than the larger cap companies. So as we speak, the profit pool of smaller and mid cap companies are growing faster than large cap companies. And almost 90% of the IPOs are taking place in the small and mid cap category. So the innovation quotient is what keeps the market going, and we need to monitor, analyze, and change accordingly.
There's a question for you, sir. In the current climate of economic volatility, what specific strategies do you recommend for modern investors to build resilience in their portfolios?
I think resilience is not possible in the sense that volatility is part of the business itself. You cannot get into a equity asset and say I want FD return. Volatility will be there, and one has to accept it. If you do not like volatility and you want to reduce volatility, you can tweak the portfolio accordingly by going more into large caps and keeping less of mid and small caps, or getting into an index strategy if you don't want to see extreme outperformance or underperformance. These are optionalities available to the investor, or you keep a higher cash pile or getting into a hybrid or balanced advantage funds to ensure that the journey is smoother. But it comes with a sacrifice of returns. No pain, no gain.
The other question that's addressed to you is, how do you see technological advancements reshaping investment strategies in equity markets, particularly in terms of data analysis and decision-making processes?
So we are still old school as the mutual fund industry, but there are a lot of tools available in the marketplace which are speeding up productivity, pattern recognition. All of these kind of aspects are being built into the various engines, chart engines, Bloomberg, technical engines, etc., which kind of tell you what is happening. It may not be that everything that you see on these alert mechanisms are right, but it will alert you to at least examine and re-examine the portfolio vis-a-vis the new findings.
Thank you so much, Mr. Ramanathan. Please stay on because we will have a round with the entire panel. But up next, we have Dr. Nitin Dumasia, President and CEO, Grolity Incorporated. Gives me great pleasure to introduce him briefly. Dr. Dumasia, a purpose-driven Indian citizen, serves as the President and CEO of Grolity Incorporated, a global advisory firm based in the USA, focusing on ESG and sustainability solutions worldwide. With a bachelor's in mechanical engineering, he recently earned an honorary doctorate in ESG and business sustainability management from Sorbonne University, France, for his groundbreaking research on evaluating organizations' ESG scores comprehensively. Over his 18-year career, he has worked with esteemed multinational companies across Switzerland, USA, Canada, and India, gaining expertise in both manufacturing and consulting domains. Dr. Dumasia holds certifications such as Certified Lean Management Professional and Six Sigma Black Belt, reflecting his commitment to excellence in this field. Even amidst challenges posed by COVID pandemic in 2020, Dr. Dumasia launched Grolity, leveraging his extensive experience to benefit global business enterprises. He actively contributes to SDGs, ESG, and corporate sustainability management with numerous published articles and notable contributions to global initiatives like UN Global Compact. He resides with his family in Surat, Gujarat. Dr. Dumasia is a devoted father, husband, brother, and son, exemplifying dedication both professionally and personally. Welcome, sir. Over to you.
Thank you, Alokji, and good afternoon, everyone. It's a pleasure to be part of this panel, and I sincerely, thank everyone of the organizing company and the BBF team to, host me here in this panel. Now, this is really, really very, very important session which investors must listen. The kind of the situation, especially in our country, in India, taking shape from the investors' perspective. These kind of fundamental understanding where, somebody, a very, very, experienced person like Mr. Ramanathan is talking about being adaptive or, to be open for the change which is coming to us. And in future also the change has to come with a faster pace. And I was listening to, gentlemen's comment here, and they are all coming from a very, very, rich experience and suggesting investors to, take care on various aspects. Coming from the background of ESG and, the value we are adding to the fraternity of investors, normally ESG, which is environmental, social, and governance as a concept, is considered as one of the premium or prime objective for organizations to explore their sustainability initiatives. So for individual investors, it is very, very important wherever you are putting money, whichever company you are investing, you must be clear about, where exactly the money is going, the business model of the company, and the future sustainable growth of the company you should be also clear about. If I have to tell something to our individual investors on how to see ESG, there are some funds also available now in our country and different parts of the world on ESG. Basically, these are the funds where people are, means the companies are investing, or, they are exploring more opportunities in the space like sustainability, green tech, clean energy, climate tech, and stuff like that. So, for example, if we talk about a company which is into solar energy, the company which is into electric vehicle, the company which is aspiring to do something in terms of hydrogen as an alternative energy source, these are all the companies which sees a very bright future, especially in our country. So each investor, because the money is a very hard-earned money, we should be also doing some sort of introspection or investigation about what is the business model about this particular company, which is a listed entity now, and then we should put our money. ESG has become a very big topic globally. There are organizations and regulators like SEBI in our country. If we talk about those regulators, are bringing a very tough disclosures requirement for all those listed companies. Just to give you the context about the disclosures requirement right now in India, it was started with 200 250 listed companies around 7 years back, and then SEBI was always becoming very, very aggressive on those companies which are actually delivering more value in terms of the market capitalization in Indian listing space. Today, if we see for the financial year 24-25, there is a mandate for top 1,000 listed companies, and they have to disclose what all things they are doing in terms of the sustainability aspects. ESG, it is a spectrum which covers 3 different dimensions, which is environmental, social, and governance. In environmental dimension, all these listed companies have to disclose information like how much water you are consuming, how much is your carbon emission, how much you are generating waste, how much transportation is happening about your products and services, how do your employees actually commute and come to your office and go back, which vehicle they use, stuff like that, the chemicals you use, the packaging materials you use. In terms of the social aspect, they have to disclose about how many employees they have, how many employees are male, female, what is the gender equality status of your company, percentage of gender, the female contribution in your boards, in your middle management, in your workforce, the amount of CSR, the corporate social responsibility fund you are putting for the philanthropic activities, the charitable activities across communities, data privacy, data security. We are talking about cyber security here, anti-money laundering, stuff like that. And in governance aspect also, they have to disclose that, you people are fulfilling the compliance requirements, being a listed organization, and there is no complaint on the governance aspect. Anti-money laundering, you have a code of conduct, you have code of practices, stuff like that. So those top 1,000 listed companies are disclosing their performance in India. And that is how, in India, we have chalked down a very, 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 aggressive, I would say, insights on, the listed companies, and they are all doing very nicely so far. SEBI has been so much instrumental to actually craft this entire disclosures requirement. Now, why I'm saying these fundamental aspects of ESG and SEBI's disclosures, which is now also called as BRSR, which is Business Responsibility and Sustainability Reporting, because each individual has a right to understand what all things company is doing. I believe each individual investor, the retail investors, should also go to the company's website, check their sustainability report. Especially they should check about what all things they are doing in ESG aspects, so they can learn more about the company, and then they can make their wise decisions whether to invest in this company or not, or how much to invest in this company. For the opening remark, I would like to limit up to this level, and then I'm open to any question you may have in this area.
A couple of questions coming your way. How do Indian companies stack up on the governance front versus their global peers?
Yeah, I'm seeing Indian companies are doing really well on the overall governance aspect when we compare them with Fortune 500 companies globally. Few examples, like Indian companies are investing these days a much of the effort into developing their own supplier and tier 2, tier 3 subcontractors, and then also going up to that level and evaluating their performance on the governance. For example, earlier were the days where there were child labor or forced labor which was happening in the industries. Now we can see that corporate companies in India, especially the listed companies in India, are also evaluating the performance of these kind of compliances to their contractors, to the tier 2, tier 3 people who are working with them. Another aspects, in terms of corruption or anti-money laundering or antitrust processes, they have laid down very strong SOPs, I would say standard operating procedures and protocols, and they are not allowing anybody who is involved in any suspicious activities. They have a very strong risk management process in place. I'm seeing on a daily basis that company secretaries and chartered accountants are playing a very crucial role evaluating and mitigating risk on behalf of these listed companies in India. And that is actually helping all the companies to demonstrate the best possible performance on the governance aspect.
So, would you a follow-up question to that would be: would you say that the scrapping of the electoral bonds in the country is a retrograde step?
Yes, I agree with that, and I think uh, such a step will definitely help us make our future more cleaner or brighter, I would say.
So, with this, I now throw open the floor to all the panelists who can, ask a question of each of the panelists or to any one of the panelists that they may so desire. So, this is like a general conversation we can have for the next 4 or 5 minutes, which will help round up the topic discussed.
Yeah, very well spoken by each of the panelists, Alok, and I think so. The knowledge and the information they shared, and especially Satish sharing that if you want to come to the equity markets, be away from you don't have an answer to resilience. The very fact that you're coming to equity market is the inherent is they'll be volatile, and of course with Nitin and Ayush and Amar sharing their views. And of course, Kushu was the technical guy and the technical, or I should say, more champ of all. I would not say jack of all, but a champ of all, Kushu, in the BSc. It's a very interesting session. And one question I would like to throw to the panel is that, and I asked the same to Nilesh bhai also, that with so much of, committed money coming to the markets, where do we how does it overall give you some perspective of what will the returns be? And also I'm seeing with the SIP, it is the more of people or investors who are not so informed of the market are entering the markets, and I see a lot of the promoters and FIs selling. So it's like the educated are exiting and the informed are exiting, and the uninformed are entering the market. So these two things, how you can correlate, and if you can give us some insights into that.
Can I say something on that?
Yeah,
please go ahead.
So in my view, it is the time horizon that will matter. So even if you are, because earlier also, of course, markets have made their all-time highs. So if your horizon is 5 to 10 years, then you don't need to worry at what price or time I'm entering. But yes, if you are looking for short term, then that's a different story. But yes, in long term, I am definitely sure that India story is bright and your investment will grow in long term. Yeah.
I have a view on this, and the basic thing that we want to highlight is promoters may sell, promoters may have their reasons for selling. But as long as we view the company as a cash flow machine and evaluate the company based on cash flow basis, it doesn't matter whether the promoter wants to sell. He may want to settle certain personal affairs. He may have several reasons for that. Dilution can take place either at the company level or the holding level. If the company wants to raise money, that's also diluting interests of existing shareholders to some extent. but it really does not change the fact that the company is generating cash flows and we are evaluating the business on the cash flows. And the SIP culture that we are starting and the money flow that is coming through, that is something which is widening the base. It is not that innocent man has come in and the old saying that we are making a sacrificial goat of him. That is not the case. The case is that, and also from that perspective, SEBI has ensured that the institutions that are created are fundamentally strong with governance, with risk, compliance, all of this. The mutual fund industry has undergone a considerable transformation. And it is probably as controlled as it can be without spoiling the innovation quotient too much. So from the investor perspective, I think the investor who is coming through SIP, etc., is getting a reasonably secure exposure to the markets. This is my suggestion and remarks on your question.
Sir, I think we've completely run out of time because the next speaker is waiting. So apologies. I'll have to end this session here.
Thank you, Alok. Thank you.
Thank you very much, everybody. It was a very engaging session. And with this, we come to our next session on wisdom from the legends, shaping the future of Indian capital markets through growth and innovation. Ujjwal, can you have our next speaker on, please?
Alok, do we sign off from here?
You can please continue to participate. However, the next speaker will be joining us to address the next session. Next up is Mr. Ramdev Agarwal, Group Chairman and Co-founder, Motilal Oswal Financial Services Limited. Brief introduction about Ramdev ji, although he needs no introduction, and there Ramdev ji is on screen right now. He is the chairman and co-founder of Motilal Oswal Financial Services, and their business spreads into retail broking, distribution, institutional equities, asset management, private wealth, investment banking, what have you. I won't take much more time introducing him. We'd like to hear from Ramdev ji. So over to you, sir.
आलोक जी, सूरज को आप अपना दिया दिखा रहे हो, तो रामदेव जी के बारे में बोलना ऐसा है. तो रामदेव जी, welcome and thank you for joining us.
What do we talk today? Good afternoon.
Good afternoon. Good afternoon.
Yeah. Can you give me some kind of, can we understand what exactly we should talk, the subject?
We are talking on shaping the future of Indian capital markets through growth and innovation. But I would request you not to limit yourself to this, to speak of anything and everything that you'd like to educate our young listeners.
So, should we go live? This is already live.
Live, yes, live.
So, good afternoon, friends. It's a pleasure to be amongst all of you. I was away from my office, so a bit of struggle to get in, but thanks to the technology, we are here, and it's really wonderful. And so actually, so much is happening in the stock market right now. It couldn't have been more, more exciting time than what we are having today. I'm in the stock market for 45 years, but I have not seen anything like this. I mean, of course, Hassan met the bull run time, those 15, 17 months, where more exciting because the stock price changes, but what happened after that. But this one is, I think, every bull run is every bull run is mother of every bull run is bigger than the last bull run. So this is, in my experience, is the fourth big bull run. First one I saw is 1992, second one was 2000, 2001, third one was 2007, 2008. And let me tell you, every bull run has a different connotation, different reason, and different set of companies they win. And this bull run, only later on we'll come to know as the progresses that what will be the shape of it. Like in the sense that what like in 2000 it was all the technology companies. So what will be the shape of it, that will come a little later. But right now the bull run which is on is not so much global in character. Of course, the global markets are also good right now, but we have our own bull run this time from India because of the retail participation. And retail participation happening for 72 years. Retail remained almost on the sidelines because of KYC, the lack of digital infrastructure, and all sorts of things. People thought they were getting at point of time 15% fixed interest rate. So why should come for 15% in the stock market? Then later on, it became kind of a little cumbersome to do the KYC and all. And and there was no distribution also. So now everything has come together. There's a digital infrastructure. There's a complete dematted environment. And there's a KYC, which is like in few minutes, you can start the trade. So till 2020, there were just about 40 million demat accounts. Today, we are opening 4 to 4.5 million accounts every month. So that 40 million has come to about 178, 179 million as of September 24. And there's a lot of juice still left. Every month, we are getting 4.5 million. So I think there's a long way to go. And we could be headed for 300 million in next 3 years and 500 million eventually in 10 years. So this is one of the most visible participation by retail. Now retail comes with a small boats of money, 3,000, 5,000, 10,000 SIPs. And then of course the big guys are also there. So clearly there is a kind of a revolution, or there is a share market kranti is on in the market. And that is showing up in the asset accumulation day after day, month after month. And that's why you see last month, I think October itself, this month itself, foreigners have sold, I think 55, 60,000 crores. And then domestics have bought equal amount. And that's why markets are in a sensible fashion right now, in a good zone. And so the resilience in the market, the real change is the resilience in the market, in the sense that one, of course, market is higher than what it could have been otherwise. But there is a complete resilience. Market is refusing to go down in a meaningful way. And that resilience going away has taken away the fear of fall in the market. And that used to keep the people away from the market. So now people are becoming more confident in the way we think, because we have seen bad time in the last 40 years. Out of 180 million people, only 40 million people are having some memory. But out of 140 million have no memory of seeing down. They've only seen upward. So this is a very different market. I mean, you will, all the people here, those who are old, like people like us, they have to revise their understanding of the market, because this is a different market, completely different market. The future of this market is going to be, I would say, I mean, maybe I'm very narrow focused about the market. This is the real true freedom. There's a freedom at midnight, real freedom moment is happening here for entrepreneurs. Till about 4 years back, there was complete scarcity of equity money to the entrepreneurs. So entrepreneurs completely starved of equity money. There were very few guys, maybe a Tata, Birla, or Reliance, or some people had some money, but not the masses. Today, the market has opened for, I mean, we are getting about 1 lakh crore per month and increasing. So the problem is, I think yesterday, RBI governor has talked about it. Mr. Patra, somebody has talked about it, that there is a demand-supply imbalance. There is a more demand than supply. And that's why the IPO market is not shutting off. Every day, IPO market is just, I mean, you have 2 issues, 3 issues, 5 issues. This is unprecedented. This is the hottest IPO market in the world by any measure. So it will remain so for next 10 years till supply catches up with the demand. And what it will do, of course, supply will catch up with the demand. Now I'm visualizing how things might shape up and people can make their own adjustments. Supply will overtake demand in next 6 months, 1 year, or 2 years. Because if you're distributing money at some fancy prices, what should get 20p, that is getting 40p. What should get 40p is getting 80p. Literally, it's a free money to the entrepreneurs. So the whole whole country wants to raise money. And entrepreneurs are calling up. I mean, I'm getting unsolicited calls to give you mandate. Forget about it. What used to take 1 year, 2 years to get the mandate, I'm getting unsolicited call to give the mandate. So I think now supply is building up. It will take some time. Supply will come, and then of course, whatever is the fundamental value of a company, it will expand the market. This is like a Mahabharata. You know, Pandavas are there. Sorry, Kauravas were there. Now Pandavas are also come. Demand and supply both are coming together to fight one of the most glorious, rise of India is going to happen because of this. So now my entrepreneurs are free. If they have good idea, they are hardworking, they're honest, there is no dearth of capital. And if once you have the equity capital, there is no dearth of banking capital. So now you have the borrowed capital, you have the equity capital. If you have an idea and you're an entrepreneur, now, I mean, it is as good as anywhere in the world. I mean, we have our own difficulties in terms of executing, but at least from the capital market side, there is a freedom. So what is going to happen is right now, because of the flow, it's like a Ganges coming to Rajasthan. So when Ganges go to Rajasthan, what will happen is immediately there is no drainage and all. So there will be a flood. So right now we are seeing the flood. But if the Ganges keep going for 10, 15, 20 years into the Rajasthan, the whole Rajasthan will become green. So that is what is going to happen to the entrepreneurship in India. Right now we have excitement of bull run, but at some point of time supply will catch up, and then the buildup of the completely new entrepreneurial empire will happen in India, and that's why to some extent market is excited about that also. So and that's what the foreigners are missing out. That they are saying that markets are expensive, but they are not saying what is the second order impact which is going to be, and that is going to reshape the market big time. And my sense is that it is bound to have. It is happening, and it is bringing resilience in the market. It is going to bring different. I mean, so much so that Koreans are tapping Indian market. I mean, this issue which is on right now, Hyundai issue, that is they are tapping Indian market because they are finding that because it's a Korean company, but they are saying that okay, we'll issue here because this market is attractive. After seeing him, I'm sure others will also come into it. So the market will further expand. It will become proper global market. So long as we are our investors, they are right now. I mean, this is a restricted investing, I would say, because our guys are not allowed to go out. So my Indian savings are going to stay here. Now, let me tell you something about the size of the savings. In last 25 years, India has saved about $14 to $15 trillion in last 25 years. If you add up all the savings, in next 25 years, we are going to hold your breath. We are going to save $125 to $150 trillion. So last year was $1.3 trillion. So the bigger and bigger size of the savings are going to hit us. It is hitting us. Second, bigger and bigger participation is going to happen from household. Instead of going to the banks, they are coming to the stock market. And once they test 15% return instead of 5% return, you can do the equation. And that to be the resilience. If 15% comes with a lot of up and down, then the value of 15 is much lower. But if it comes without much of hiccups, then who's going to go to the banks? So we are going to see a lot of diversion of deposits on the capital market side. Savings pool itself is going to increase. But of the savings pool, nothing was coming to the stock market. Now, we are going to get fair share of the larger pie. So God knows at what pace this is going to build. But I'm very excited. There is going to be flood. There is a flood of equity money coming to all kinds of guys. And now, once the secondary market is up, the primary market, the private equity and all, they are doing very well. And then the seed level, I mean, the guys who are starting business, they're also getting a lot of exciting offers to start the business. So, so all in all, it's a very different kind of time we are passing through. I would say that I think it has also hurt some of the industries because immediately banks are not able to get enough deposits, and hence they have their own challenges of cost escalation and not having enough deposits. So they're not able to lend. They are not able to run their operation properly because they have taken all the costs thinking that unlimited money will keep coming to them, but it's not happening. So it has its own challenges. I believe some of the consumer companies are also going slow because people are, instead of buying car in 3 years, they are buying in 4th year, 5th year. So obviously there's a deferral of the purchase of the cars or many other things to pay for their whatever SIP or they want to invest here. So that is what is happening. So that is hurting the economy. in near term. But my sense is that after 6 months or 1 year, and with this bumper monsoon and interest rate cycle coming down, we have a very exciting time going forward from here. But let's not forget, markets are expensive. We are trading at about 150% to GDP. Even 1 time to GDP used to be pretty good number, but now valuation is about 1.5 times of GDP, which is clearly market as a whole. I'm not saying every stock, but market as a whole is reasonably priced, or I would say very richly priced. And it is not correcting. So, I mean, after 60,000 crore sales in 10 days, if the market doesn't correct, it means that there's a resilience is total. You imagine the moment they stop selling, what will happen to the market? So, so clearly markets are very resilient, and so it is very exciting time. I mean, you cannot forecast everything about the market. You can visualize some of the steps, few steps, what is going to happen, and then one leads to other. And I only hope that this boom translates into second order impact in terms of entrepreneurship, and it takes the entrepreneurial confidence to a different level, and we build the country on the base of this what do you call, the flow which we are seeing in for last I would say 3 to 4 years. I mean, immediately after COVID. So 1 year, 1.5 years went in just recovery of the COVID. But after that, from I would say 2023 particularly, 23, 24, I think these 2 years have been fantastic. And it is going to redefine, because we were considered as a insignificant industry. RBI still thinks that we are a sensitive industry, so we have to be, guarded very, very much. So they have to also relook. Regulators also have to relook. I mean, I think SEBI has done a fantastic job. RBI has done a fantastic job, but the size and the complexity and the scale is just going to explode on our face only. I mean, a broker is a broker. I don't think they have a much of social respect or man of significance. But that is going to change. That is going to change big time. So our association, which is a platform where we are talking, I think it must be 50, 60, 70 years. I mean, I know all the great guys with whom I learned the trade. But this is a different time. This is going to be very technology intensive. Very high, large number of people will be there, and I think we are going to see trillions in terms of now our daily trade is like $5, $7, $8 trillion, which is kind of the world's largest trading pit, and it is expanding, and it will expand. I'm telling you, because I mean, you remember in 1987 till 1990, the daily trade was 200, 250 crores. T plus 15 settlement. T was 15, what do you call, volume period, and settlement used to be another 7 days. So T plus 21 was the settlement. And सबको पसीने आते थे, वांदा सजा थे. Today we have T plus 1 settlement, zero defect. बॉस तुम्हारा शाम हुआ नहीं कि तुम्हारा चेक तुम्हारे पास आ गया. I mean, what a change. Public issue. You do it today. In 3 days, there is a listing. What kind of market we are talking about? It's literally a cash market. So there is a dramatic change. And these changes are going to be positive. It takes time at a country level to flourish. But my sense is I'm very excited. It is, I mean, I cannot have view on every aspect of it. But I think the second order effect, which is going to happen, and it is happening, we can see, because the corporate earnings are very slow. Another concern is the current corporate earnings are going to be slow. This quarter is going to be only 6-7% kind of a growth. But my sense is after 6 to 8 months, we are going to see real bounce in the earnings, because this all the equity money which is going in, that is going to work out for the markets as a whole. So I'll restrict my remark up to this. If there is anything I can do, please let me know.
Thank you, Ramdevji, for this ultra bullish sentiments that you have echoed for our investors. I'm sure they'll be very happy. But there are a list of questions. I will weed out a few and take the next 10 minutes asking you a few questions. One of them is, what is the significant risk factor in your opinion that can trip this entire narrative?
Supply itself. See, there are two. Basically, one is the supply. If there is an oversupply in the market, which can be controlled by SEBI in terms of I mean, if every day you have 7 issues, because आप यदि पैसे फोकट में बांटोगे, जिस कंपनी की कीमत 500 करोड़ होना चाहिए, आप 5,000 पे बेच रहे हो या 2,000 में बेच रहे हो, तो ऑब्वियसली क्या एंटरप्रेन्योर बेवकूफ थोड़ी है? They are the smartest guys. They are the smartest guys. They know value of their company. Price is quoted by you. See, price is high, but value remains where value is. So when the price is significantly higher than value, supply will come. You wait for some time. Nobody is going to leave this market. So everybody is excited about the social, now in all over, particularly Delhi and Mumbai, in the social circle, people ask for what is your market cap? If you don't have a few $1 billion market cap, you are nobody. So now every entrepreneur, everybody start a builder. Now everybody is honest. Nobody wants to take money from the P&L. So clearly there is a change, and the supply is going to build up like a Rakshas ki tarah badhega. I'm telling you, supply in 6 months' time. I can see in my book, we have done 7 IPOs. We have 70 IPOs in the pipeline. So it is 10x pipeline build up. It is all going to come. So one is the supply, which can overtake the demand. Second, I think the earnings, corporate earnings. If corporate earnings don't come, then supply will further increase actually. You can keep writing your checks, but if the supply keeps building, you cannot control the supply. So supply will kill the demand, but if by chance earnings explode, then everybody wants to buy. So
brings me to my next question on QGLP, quality, growth, longevity, and favorable price investment framework, which has become the guiding principle for many investors. How do you see this framework evolving in the future with changing market dynamics?
My sense is this is a very comprehensive framework. Okay. But every component, how do you practice, is completely your call. The way I do it, you will do it differently. Okay, that QGLP, all the 4 components are very important. Basically what it is: terrific business, terrific management, growth-oriented, bought at reasonable price. It's very commonsensical framework. We just put it 4 fancy words. अच्छा business, अच्छा management, सस्ता price, बस और कुछ नहीं. लेकिन क्या है उसको? What is अच्छा business? What is अच्छा management? What is, visualizing the growth. See, one is
what's अच्छा price? Because that is the other question that befuddles everybody. कि कौन सी price सही price होगी और कौन सी महंगी है?
Yeah, so that's where the expertise comes. कि भाई आप see, if you know the industry well, the company very well, you are willing to pay 2x, 3x more. If you don't know the company, you are only looking at the P and P price to book on some newspaper. You cannot appreciate that.
So as Peter Lynch said, that know what you buy and buy what you know. But एक और क्वेश्चन है रामदेव जी, जैसे आपने खुद ने कहा कि ऑलमोस्ट 1 लाख करोड़ हर महीने का स्टॉक मार्केट्स में आ रहा है, तो जब इतना ज्यादा डिमांड है, तो विल द सप्लाई बी सो मच? Other corporates can offer so much of paper to the investors?
साहब 470 lakh crores का market cap है. Okay, 1% supply is 4.5 lakh crores.
Okay.
सरकार के पास अभी 90 लाख करोड़ का माल है. वो लोग 2-3 लाख करोड़ का माल फेंके, तो actually this is the time they should sell.
Correct.
Thankfully, there is some quality there. Thankfully, there is some semblance of quality there, because if there's too much money available, there's the risk that bad quality stock will come.
See, it will come. If the good qualities don't come, the place will be taken by bad quality, and that's where the end will come. Because bad quality will never deliver. I can take the price anywhere, but if it is loss-making, it's loss-making. Yeah. How will he deliver, you tell me? So it is the problem of quality supply. Because what is existing is there. They're already fully priced, or they're getting priced overnight. So
changing track a little bit in terms of regulatory reform, what do you believe is still needed to enhance investor confidence and further develop Indian capital markets?
Yeah, so that's a good question. I have very few suggestions to make, but I think the IPO market, say that advertisement which comes, which is expensive, but you don't get to know anything. The whole focus is on risk factor. अरे भाई पहले आप समझो तो सही, कौन सा किस चीज का इशू है, कि वो लकड़ी बनाता है, गाड़ी बनाता है, बैल बनाता है. there is no description of the company. There is no description of the past performance. There is no description. जैसे हम बोलते हैं ना, business, management, growth potential, and then the price. उसमें चारों चीज नहीं है, खाली risk factor है. तो क्या फायदा है सर? How do you sell your IPO?
So beautiful, so beautifully put, Ramendra. रामदेव जी, आपने you hit the nail on the head एकदम. बिल्कुल IPO के जो फॉर्म के अंदर कुछ भी इंफॉर्मेशन नहीं रहती ऐसी.
आपको फ्रंट पेज में होता है.
हाँ.
पेज में IPO होता है, लेकिन उसमें कुछ मालूम नहीं पड़ेगा आपको कि वो. So I think I told SEBI chief, but they have their own process of looking at it. But she listened to me. But these are the simple changes जो pain करता है. मेरे को see there are 100, 200 IPOs this are going to come. How do I? मैं उनके वेबसाइट में जाके पूरा कहाँ से पढ़ूंगा मैं? आप एडवर्टाइजमेंट कर क्यों रहे हो? इसके लिए कर रहे हो कि भाई कोई कॉमन आदमी पढ़ ले, समझ ले, उसको ये बहुत एक्साइटिंग लगेगा तो you'll go for deeper understanding. But वो बात नहीं है. So that is one change, I mean, which is very procedural, but that should be definitely brought. Second, I would say, I mean, I think we are doing wonderfully well. Otherwise, I mean, there are some operational issues could be there, but I think the regulators have done a wonderful job. My sense is the industry should not be looked. I mean, like SEBI is saying that their job is to facilitate capital formation, which was a fantastic thing to say. Okay, like that, if the RBI also thinks that they are essential part of the economy, like we are essential part of the economy to provide liquidity to the entire entrepreneurial system and creation of value in the economy, I think that will be very nice. I think the banks are very, very restrictive in extending any kind of funding or for running the trade, So I think that aspect of it should also be, because whatever happened in 92 years, still calling it, there is no reform for last 30 years. Because there's something happened at that point of time. It has become a risky industry. अरे भाई, इस industry में ना कुछ काम नहीं होने वाला. I mean, who is going to give you? I mean, you are a small guy. 200 का turnover है, 10 का नफा है, 20 का नफा है. मैं आपको 1000 करोड़ का valuation दे रहा हूँ. You can have the cake and eat it. कहाँ होता बताओ मेरे को?
सही बात है.
And that industry, इसको बहुत पाल पोस के बड़ा करना पड़ेगा. You have to encourage research. You have to. There is no recognition of research. Who wants to write research today in the market? सबको सौदा करने का है. किसी को लिखने का नहीं, कहानी उसकी. कैसे सौदा?
आजकल तो काफी कुछ AI लिख देता है.
कुछ नहीं लिख सकता AI. हम जो AI है वो आपको बताता आगे. कोई AI के दिमाग थोड़ी ना है. But ultimately he will go and find out somebody has said something in the system. And AI should also be used in research. Why not?
Yeah.
So what I'm saying is that, see, there is a price and there is a value. Okay? Correct. Price is for everybody. Who will know the value? Unless you write research, you cannot figure out the value. And if you have a shallow research, you'll have a shallow market. I bet on this. You have excessive trade, but zero research.
Final question for the day, sir. As a pioneer of the annual wealth creation study, what have surprised you most in recent years?
Pardon?
What trends have surprised you most in recent years in your annual wealth creation study?
I mean, every year, every study looks to be, wish I had done it 25 years back. Because it's a ladder of learning. Your next study is also dependent on how much you learned. Okay, so last year we did hockey stick strategy. Okay, so that told us how to run a company when there's a power of tailwind, basically. But that we could understand after doing 27 studies. Now, finally, we are coming to the very old one. This year, we are going to do study on turnaround stocks. How to look at turnaround. But it's not easy. It's very tough to make a lot of money because you hear one or two stories like CG Power or Suzlon or whatever, telco. But with one telco, there are 1,000 non-telcos also.
Very true.
So how do you see, how do you find these companies for the turnaround? Because if you get one right, you can make 1,000 better. 200x. So this year's study is devoted to that. We just started it 15 days into this. I'll be able to explain more maybe in December or something.
Yeah, so Ramdevji, thank you so much. I see that ladder behind you, which signifies what you just said. And I also invite you for a BBF dinner on the 18th. So if you and Motilal can please find some time and join us for a BBF dinner where we expect all the MIS dignitaries to join us. It will be a pleasure to have you also, sir, on the 18th dinner, sir, at Sahara Star. Thank you, Ramdevji. Alokji can propose a vote of thanks.
Thank you, sir. Thank you so much for your very enlightening talk. And like Ramdev ji said, there's going to be a flood of IPOs. There's going to be a flood of issues. There's going to be a flood of money coming into the market. Choose carefully. Use QGLP in your own way. Thank you so much, Ramdev ji. Up next, we have Vijay Kedia. Again, gentleman who needs no introduction. Ujjwal, is Vijay ji in the house? Vijay ji's video is not yet on.
I should also thank Alok. You've been doing a fantastic as a master of ceremonies and conducting the entire event so well. Alok, with your lovely questions which you've collected over the period of time from your own research and from your well-wisher, I should really thank Alok. He's been doing a fantastic handling of
Thank you, Anup. Thank you. It's always a pleasure. And this is one event in the annual calendar that I look forward to, because where else can you get up close and personal with the doyens of Indian capital market? ये तो lifetime की opportunity रहती है. So I am eternally grateful for BBF to inviting me to host this event. Vijay ji, warm welcome to you. सुस्वागतम आपका. एक सारे लिसनर्स, इन्वेस्टर्स, यंगस्टर्स को एक आपका ब्रीफ इंट्रोडक्शन देता हूं और देन द फ्लोर इज योर्स.
थैंक यू डियर.
उनका इंट्रोडक्शन आपको एक गाना सुना के करना पड़ेगा फिर विजय
Please.
Vijay Kedia is a private investor in the stock market, having experience of more than 3 decades. He joined stock market with zero capital. Some of his investments have been appreciated over 100 times in the last 15-20 years. And one of his investments has given him 16,400 times return. Hold your breath. He's a keynote speaker in many business schools, including IIM Ahmedabad, IIM Bangalore, London Business School. He has been a TEDx speaker twice. In 2017, Kedia was confirmed with a doctorate degree. He has written and sung many songs on investing to educate new and small investors. And I would say not only new and small investors, they are an education for us too. Recently, he was given an award for Ace Investor by Honorable Minister Shri Piyush Goyal and Devendra Fadnavis. He was also awarded Sarvottam Sanman 2020 at Raj Bhavan by the Maharashtra Governor. He was also honored with Shri Babasaheb Ambedkar Award and Shri Abdul Kalam Award. Over to you, Vijay ji. सब उत्सुक हैं आपको सुनने के लिए.
नहीं, थैंक यू वेरी मच आलोक जी. थैंक यू वेरी मच. और भी जो भी डिग्निटरीज वहां पे है, मेरे को नाम नहीं मालूम है, माफ करना. So thank you very much. I'm honored to stand before you today at this significant event organized by BBF, BBF Investors Week 2024. So let us talk something about capital market. Then we will discuss about the 16,000 return, the 16,000 times return which you discussed and all, Alok ji.
और विजय जी, अगर आप हिंदी में बोलना चाहें तो वेलकम, बिकॉज सब दुभाषीय हैं, अंग्रेजी भी समझते हैं, हिंदी भी समझते हैं, तो जैसे आप कंफर्टेबल.
हाँ, ठीक है. तो मैं दोनों अंग्रेजी हिंदी दोनों
इंग्लिश में बोलेंगे तो बढ़िया.
हाँ, ठीक है, no problem. So as we all know that Indian capital market is not just a financial arena. It is a reflection of our economic aspiration and potential. I remember a few months back when mutual fund got some 15,000 crore rupees in a month. That was around some 8-9 months back. उस समय मेरा कोई एक इंटरव्यू था CNBC के ऊपर में, एंड एवरीबॉडी वाज रियली गंगो, एवरीबॉडी वाज एक्साइटेड, ओ माय गॉड, इंडियन म्यूचुअल फंड गॉट 15,000 crore रुपीज इन अ मंथ. सो दे आस्क्ड मी कि अरे तो बहुत बड़ा बात है, व्हाट्स योर व्यू ऑल दिस. आई सेड कि भाई ये 15,000 crore महीने के अंदर में आया है, सो दैट इज almost 500 crore rupees a day, you know. So 500 crore rupees in a day, what a big amount, yaar. We are talking about, we are that time we must be at $3 trillion dollar का जो भी अपना जो भी मार्केट कैप होगा, या 3.5-4 ट्रिलियन जो भी होगा. So it's not a big deal. 500 crore rupees is like just a drop in the ocean. So मेरे को ये लगता है, I told them कि I think this 15,000 crore is going to come on a daily basis, you know. हाँ, ये मंथ का क्या है इसके अंदर में. So now we have reached to some 25,000 crore or 26,000 crore. I think last month mutual fund got some 25-26,000 crore. So by and by we are actually progressing in that direction, and I think that maybe that day is also not far. Maybe in 2 years time or 3 years time will come, we will get 15,000 crore rupees on a daily basis, you know. Because the simple reason, you know, that Indian population have really woken up, or once this Indian population, when they wake up, no, so they make all the luxury and they make everything so common, you know, that and of course it is not only this momentum. Let me tell you that we have to keep this momentum going, okay, and whatever to sustain this momentum, we must keep on embracing innovations, you know, regulatory frameworks prescribed by SEBI, and which are very vital in promoting transparency and fostering a, you know, this conducive environment for growth. So इसके अंदर में सेबी का सबसे बड़ा हाथ है, जो मेरे को लगता है, जो फ्रेमवर्क, जो सेबी का जो रेगुलेटरी जो फ्रेमवर्क है, और एक्सचेंजेस का जो एक्सचेंजेस ने जो इनोवेशन किए हैं, ये उसके कारण ये हम ऐसे यहाँ पर पहुंचे हैं कि हमारा 18-20 करोड़ डीमेट अकाउंट है, 12-13 करोड़ हमारे, आज समझिए हमारे एक्टिव शायद इन्वेस्टर है. तो ये इसके कारण, ये बिकॉज ऑफ ऑल दिस इनोवेशंस एंड ऑल दैट, कि ये वी हैव रीच्ड टू दिस सिचुएशन. और मेरे को ऐसे लग रहा है कि इसी चीज को अगर इफ विल कीप ऑन इनोवेटिंग एंड कीप ऑन ब्रिंगिंग रिफॉर्म्स एंड ऑल, सो there is no, I don't have any doubt in my mind that this market will also touch a new highs, will keep on touching new high, and more and more money will keep on coming in the capital market. So there are several key drivers which have emerged that can propel our capital market forward, like constant technology advancement, which already we are doing, and the biggest role can be played if we like हमारा जो investors education जो है, वो अगर widely reach अगर हो जाए all India basis पे, वो सबसे important point है. क्योंकि लोगों को अभी भी शेयर बाजार का निटी ग्रिटी नहीं मालूम है, स्टॉक मार्केट में इन्वेस्टमेंट करने का साधन नहीं मालूम है, लोग मिसगाइडेड होते हैं अभी भी. तो ये मेरे को ये लगता है, इन्वेस्टर जो एजुकेशन है, ये बहुत इंपॉर्टेंट रोल प्ले कर सकता है ये कैपिटल, वाइब्रेंट कैपिटल मार्केट जो ऑलरेडी है, इसको सस्टेन करने के लिए. और ऑफ कोर्स डाइवर्सिफिकेशन ऑफ फाइनेंशियल प्रोडक्ट्स एंड ऑल, जो ऑलरेडी चल ही रहा है. कई इनोवेशन की भी जैसे जरूरत है, जो ऑलरेडी हम लोगों ने किए हैं, आप लोगों ने किए हैं, ब्रोकर्स ने किए हैं, एक्सचेंजेस ने किए हैं, जैसे वो डिजिटल प्लेटफॉर्म का और मजबूत होना, ESG इन्वेस्टिंग आता है, क्राउड फंडिंग आता है, स्टार्टअप्स आता है, SMEs आ रहा है. अब कितने IPO आ रहे हैं इंडिया के अंदर, 62 मिलियन SME है भाई. आप ये सोचिए, 62 मिलियन, 6 करोड़ से ज्यादा SME इंडिया के अंदर में, और अभी तो ये 1000 में आ रहे हैं खाली ये, तो यहाँ पे तो अगर ठीक से अगर इनको रेगुलेट किया जाए, और ठीक से इनको हैंड होल्डिंग किया जाए, इनको और ठीक से एजुकेट किया जाए, तो ये तो आप ये समझिए 6 करोड़ में छोड़िए, 10 लाख तो आने के लिए अगले 10 साल में आ ही सकते हैं, फॉर एग्जाम्पल. तो ये है कि ये सारे काम हो सकते हैं इनोवेशन से, ये सारे काम हो सकते हैं कि अगर ठीक से हम टेक्नोलॉजी को अडॉप्ट करें, और लोगों को अगर हम ठीक से अगर उनको हम एजुकेट करें और सिस्टम को और इजी बनाएं. तो मैंने एक जगह पढ़ा था कि वन इनोवेशन कैन चेंज योर इकोसिस्टम, वन लीडर कैन चेंज योर कंट्री, वन आइडिया कैन चेंज योर वर्ल्ड, and one mentor can change your approach, and one opportunity can change your career. Similarly, one bull market can change your net worth, and last not the least, one stock can change your life. So ये शेयर बाजार का तो ये मंत्र है कि यहाँ पर जिंदगी में सफल होने के लिए, करियर बनाने के लिए, और कुछ तोड़फोड़ करने के लिए एक स्टॉक भी काफी है। अगर आप उस स्टॉक को अगर एक अच्छी अगर उसमें नॉलेज, करेज और पेशेंस, तीन चीज अगर आप उसके अंदर में लगाते हैं, तो वन स्टॉक कैन रियली चेंज योर लाइफ इन अ मीनिंगफुल वे, व्हाट आई एम टेलिंग यू। सो आई वुड लाइक टू डिस्कस दैट व्हाट चेंज माय लाइफ, that what one stock changed my life. So I remember one stock I had bought in 2000, around 2005. The stock was very cheap according to me, and it was listed only at the BSE. उस समय NSE पे स्टॉक लिस्टेड भी नहीं था और लिक्विडिटी भी बहुत कम थी। तो मेरे को उसको 7-8 महीना मेरे को लगा शेयर्स को एक्यूमुलेट करने के अंदर में, और करीब 4-5 जो बुल मार्केट का नया शुरुआत हुआ था उसके अंदर में, तो समहाउ उसके अंदर में मेरे को कुछ 3-1% शेयर्स कंपनी के मिल गए होंगे। तो मेरा जो बाइंग प्राइस था वो था, दैट वाज 70 रुपीज वाज माय बाइंग प्राइस। And in 2000 bull market, as I said, कि one bull market can change your world. So that was the beginning of the bull market. Super duper mother of all bull market had begun. That everybody knows, So 2007 का जो तेजी था उसके अंदर में that 70 rupees shares went up to 225 rupees. तो 225 रुपया हो गया। तो लेकिन अपने as I said कि नॉलेज, करेज एंड पेशेंस, और अपने को लाइफ सुधारने का था, अपने को एक स्टॉक के अंदर में लाइफ सुधारने का था, अपने को अपनी दुनिया बनानी थी, पैसा नहीं कमाने का था कि हाँ भाई समझो मैंने इतना लगाया, 2x हो गया, 3x हो गया। तो मेरे को लगा इसी के अंदर में अपनी दुनिया अपनी बननी है। तो ये बता रहा हूँ कि शेयर बाजार में ऐसी अपॉर्चुनिटी है, ऐसा है। तो आई डिड नॉट सेल एनी शेयर्स एट 225। And after that, in 2008, that Lehman Brothers crisis came, and entire world market, जो mother of bull market, converted into mother of a bear market. उससे बड़ा मंदी भी कभी देखा नहीं गया। और शेयर बाजार का यही सिस्टम है यहाँ पर, मदर ऑफ बुल मार्केट इज फॉलोड बाय मदर ऑफ बेयर मार्केट, एंड मदर ऑफ ग्रैंड मदर ऑफ बुल मार्केट इज फॉलोड बाय मदर ऑफ ग्रैंड मदर ऑफ ऑल बेयर मार्केट। तो यहाँ पर उतार चढ़ाव का बड़ा समन्वय, यहाँ पर ये बैलेंस ऐसे ही चलते रहता है। तो इन 2008 का जब मंदी आया उसके अंदर में द स्टॉक फेल डाउन फ्रॉम 225 रुपीज टू बैक टू 50 रुपीज। सो वॉट एवर, इवन आफ्टर होल्डिंग से फॉर 3-4 years, वॉट एवर मनी आई हैड मेड इन पेपर प्रॉफिट ओनली, वॉट एवर आई हैड मेड, वो सारा का सारा मेरा प्रॉफिट खत्म हो गया। और बल्कि ऑन द प्रिंसिपल भी जो मेरा वो उसके भी वो मार्केट में नीचे आ गया। लेकिन मेरे को ऐसे लग रहा था कि देयर इज नो मैनिपुलेशन इन आवर मार्केट, दिस इज व्हाट हैपेंड इन लास्ट 22 years, देयर हैड नॉट बीन अ सिंगल डिफॉल्ट, इफ आई एम राइट, आफ्टर 2002 और व्हाटएवर इन 20-23 years, ब्रोकर की तरफ से कोई ऐसा मार्केट के रेगुलेशन सिस्टम में कोई डिफॉल्ट नहीं हुआ, ब्रोकर का कोई डिफॉल्ट नहीं हुआ, सिस्टमेटिक रिस्क मार्केट के अंदर में नहीं हुआ, So, and I have seen all these things in the past, 2002 का collapse and 92, 3, 4, 5 का collapse and all those things I have seen. तो मेरे को ये लगा कि सिस्टम रिस्क नहीं है यहाँ पर, ये मार्केट इज करेक्टिंग इटसेल्फ, एंड सिस्टम इज इन प्लेस, एंड इंडियन इकोनॉमी इज ऑन द राइजिंग कर्व। तो मैंने आई सारा का सारा जो भी मेरा शेयर्स था मैंने सब उनको होल्ड करके रखा और बेचा नहीं। नाउ आई विल टेल यू व्हाट हैपेंड, इन 2025, 1 minute, I have written it down. So from that 25 rupees, in 2011, stock went up to 245 rupees. Okay, so that was और in between अभी मैं जो 225-45 बोल रहा हूँ, इसमें 1-to-1 बोनस आया था 2010 में, तो मैं उसको माइनस करके आपको बता रहा हूँ। तो 250 मैंने 500 समझो, तो वो 50 जो मैं बोल रहा हूँ समझो वो 25 रुपया हो गया था सपोज, अगर 1-to-1 बोनस को कैलकुलेट करूँ। और वहां से वो शेयर्स वहां से बिका 250 रुपया 2011 के अंदर में, और 11 में ही 250 रुपया वाला शेयर वापस आ गया 150 रुपया। तब आप सोचो एक कंपनी का आप 2-3% आप होल्ड करते हो तो आपको तो मारे आपके तो बोले ना, भगवान जब देता है तो छप्पड़ फाड़ के देता है, जब लेता है तो थप्पड़ मार के लेता है। तो ये शेयर बाजार
की नींद नहीं उड़ती,
हाँ जी,
रात की नींद नहीं उड़ जाती।
वो आलोक जी, वो नींद वाला जो था ना, मैं मेरा लाइफ में उसको छोड़ आए हम वो गलियां, क्योंकि जिंदगी में इतनी नींदें गवाई ना बॉस, और इतना ये सब ट्रॉमा और इतना ये सब देख लिया लाइफ में। मैं हमेशा यहाँ पर बोलता हूँ आलोक भाई, यहाँ पर अनुभव का पैसा शेयर बाजार के अंदर में, आप कितना यहाँ पर तपते हो, कितना यहाँ पर गिरते हो, और कितना यहाँ पर आप फेल होते हो अपने विचारों में, अपने 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 परसेप्शन में, अपने कन्विक्शन में, और अपने फॉर्मूला में। आप जितना ज्यादा यहाँ पर फेल होते हैं ना, उतना ज्यादा आप यहाँ पर तपते हो, उतना ज्यादा मार्केट आपको ज्ञान देता है उतना। और ये चीज ऐसी है कि आपको मर के ही स्वर्ग जाना पड़ता है, ज्यादातर ऐसे ही होता है, और आपको बोल के कोई आप सीख नहीं सकते उसको, ये आपको उसके लिए आपको खुद को ही गिरना पड़ेगा उसके लिए। तो मैं कई बार बोलता हूँ, कोई बोलते हैं कि मैं देख के सीख लिया, देख के सीख सकता हूँ क्या, तो मैं एग्जांपल देता हूँ आलोक भाई कि भाई मैंने मेरी जिंदगी में 500 बार मैंने वो हेयर कट कराया होगा, और जितनी बार भी वो हेयर कट कराता हूँ मैं दर्पण में देखते रहता हूँ कि वो क्या काट रहा है। आज तक मैं अपने बाल नहीं काट पाया भाई उसके बाद भी। तो उसके लिए आपको सीखना पड़ेगा, आपको वो थ्योरी सीखनी पड़ेगी, प्रैक्टिकल सीखना पड़ेगा। तो यही शेयर बाजार का थ्योरी है।
कहावत है हिंदी में, खुद मर्द को ही स्वर्ग प्राप्त होता है।
हाँ, आवाज करिए आपका। हाँ
खुद मर्द को ही स्वर्ग प्राप्त होता है।
हाँ, बस 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 बस, एकदम एकदम, दूसरा कोई रास्ता नहीं भाई यहाँ पे। तो वो 250 बिका, 250 वाला शेयर 2011 में फिर 150 रुपया आ गया भाई, तो आधा हो गया। वो 150 रुपया वाला शेयर 2013 में आप समझिए 12 और 13, 1.5 साल बाद वो बिका 550 रुपया। ठीक है, 150 वाला शेयर वापस 3 गुना हो गया, तो 550 रुपया हो गया। और 550 रुपया वाला शेयर, और वो बढ़ते बढ़ते 2015 में, जबकि आपको मालूम है बुल मार्केट जो इंडिया में बोलते हैं बुल मार्केट चालू हुआ था 2014 के बाद में, वापस 2008 के बाद में, और वो बिगिनिंग में बुल मार्केट में 3,000 रुपया हो गया। तो आप, और ये एक्स बोनस के हिसाब से आपको बोल रहा हूँ, समझो 3,000 रुपया हो गया। हाँ हाँ, तो 3,000 पुराना 6,000 रुपया अगर देखा जाए तो एक्स बोनस के हिसाब से तो 3,000 रुपया आ गया। तो अपना तो कॉस्टिंग 25 रुपया वाला अपना 3,000 शेयर हो गया, अपने 100 गुना तो इधर ही हो गया वो। ठीक है, और वो वापस 2015 वाला शेयर 2016 में फिर 1,500 रुपया हो गया, तो आधा हो गया। तो आपको ये इतना तपस्या करनी पड़ती है भाई यहाँ पर शेयर बाजार के अंदर में, तभी वन आइडिया कैन चेंज योर लाइफ, तभी वन स्टॉक कैन चेंज योर वर्ल्ड, तभी ये हो सकता है इसके अंदर में। और बाद में 16 वाला स्टॉक वापस पौने 2 साल में 2017 दिसंबर तक 4,300 रुपया हो गया। और 4,300 रुपया वाला शेयर जब वापस ये मार्च के अंदर में, जब ये कोविड आया 2020 के अंदर में, तो कोविड के अंदर में वो शेयर वापस 2,000 रुपया हो गया, फिर वो आधा हो गया वो शेयर। तो ये उतार चढ़ाव आपको देखने हैं। और 2,000 वाला शेयर वापस 2021 में 6,500 हुआ, और 2022 में वापस 3,500 रुपया हुआ। और 3,500 रुपया वाला शेयर लास्ट ईयर सितंबर अक्टूबर के अंदर में, कुछ शेयर 2023 में वो हुआ 8,200 रुपया। तो 8,200 माने एक्स बोनस माने 16,400। और उसमें मजे की बात ये आलोक भाई कि अपना जो समझियो जो भी मेरा ये कॉस्टिंग था, ओरिजिनल 70 रुपया का कॉस्टिंग था, एक्स बोनस करे तो 35 रुपया आ गया। उसमें मेरे को एक्स बोनस के हिसाब से मेरे को 150 पौने 200 रुपया डिविडेंड का आ गया। माने अगर मैं बोनस उसमें कैलकुलेट करूं, शेयर डबल हो गए तो 300 रुपया मेरे को उसमें बोनस मिल गया उसके अंदर। तो मेरा स्टॉक प्राइस जो वो 0 हो गया। अगर मैं एफडी में भी रुपया रखता तभी 35 रुपया के अगेंस्ट में मेरे को 150 पौने 200 रुपया मेरा रुपया बढ़ता नहीं। 16 साल के अंदर में 4 गुना मेरा रुपया होता नहीं, आप समझिए एफडी में भी। तो उतना पैसा तो मेरे को डिविडेंड से मिल गया। और उसके बाद में वो और बाकी तो 8,200 के भाव में तो मैंने वो जो भी मेरे बचे, जो शेयर्स बचे थे 1.5% बचे थे, बाकी मैं थोड़ा थोड़ा बीच बीच में बेचते आया था, वो मैंने बेचा। तो मेरे को 16,400 टाइम्स अगर डिविडेंड मैं अगर कैलकुलेट करूं, देन ये मेरे को रिटर्न मिला। और ये क्या बॉस, ये इसीलिए पॉसिबल हो पाया कि ये स्टॉक मार्केट का जो इतने इनोवेशन यहाँ पर हुए, इतने रेगुलेटरी यहाँ पर जो फ्रेमवर्क जो सेबी ने जो यहाँ पर कराए हैं, और ब्रोकर्स जिस हिसाब से ब्रोकर्स भी वेल इक्विप्ड हुए हैं मार्केट के अंदर में, उस हिसाब से ज्यादा लोग शेयर बाजार के अंदर में आते रहे। हाँ, तभी ये 12-13 करोड़ जो एक्टिव इन्वेस्टर्स हैं, या चलिए ट्रेडर्स हैं, या जो पार्टिसिपेंट्स हैं मार्केट में, वो उसी के कारण हुए। और उन्होंने इस तरह का ये काम किया कि जिसके कारण ये जैसे एक मेरे जैसे एक साधारण आदमी को भी 16,400 गुना अगर रिटर्न अगर आपको मिलता है, तो आप सोचिए कि हम शेयर बाजार में कौन से समंदर में, कौन से महासागर में हम बैठे हैं। तो मतलब यही है कि अगर इसी तरह अगर हम ये इनोवेट करते रहें, और इसी तरह ये अगर हम क्लाइंट के लिए हम सोचते रहें कि कैसे क्लाइंट को हम लोग एजुकेट करते रहें, कैसे सिस्टम को हम और स्ट्रांग बनाते रहें, और और इसी तरह का अगर हम काम करते रहे, तो मेरे को लगता है कि वो दिन दूर नहीं है जब आपको 15,000 करोड़ रुपया भाई डेली बेसिस का आपको आना चाहिए। अभी भी इंडिया में बोलते हैं जो सेविंग्स का, उसके अंदर में सेविंग्स का शायद 5-6% खाली शेयर बाजार में आता है, इक्विटी के अंदर में 5-6% आता है। बाकी ज्यादा सब रियल एस्टेट और एफडी और समझिए गोल्ड वोल्ड के अंदर में, जो गोल्ड अनप्रोडक्टिव बताते हैं उसमें चला जाता है उसमें। तो मेरे को ये लगता है कि ये सब मिलजुल कर इसमें अंदर में ब्रोकर्स को, इसके अंदर में रेगुलेटर्स को, इधर में एक्सचेंजेस को, और भी सारे पार्टिसिपेंट्स को मिलजुल के काम करना चाहिए। और इंडिया का आने वाला जो अमृत काल है वो इतना भयंकर हो सकता है कि बहुत लोगों को बहुत सारे 16,400 गुना रिटर्न मिलने वाले हैं। और ऐसी मेरी कामना है और ऐसी मेरी इच्छा है। थैंक यू वेरी मच।
विजय जी, बहुत बहुत जो उत्साह बढ़ा है, मुझे यही लग रहा है जितने भी यंगस्टर देख रहे हैं उन्होंने काफी कुछ इसमें से लेसन्स लेंगे वो, कि एक शेयर अगर आप खरीदते हो तो उसके पीछे आपकी सोच इतनी दृढ़ होनी चाहिए, इतनी गहरी होनी चाहिए कि आप में वो कॉन्फिडेंस आ जाए कि आप उसके परसेंटेज होल्डिंग में शेयर खरीद सकते हो। पहली बात तो ये मेरे एक दिमाग में बैठी कि जब तक आपकी स्टडी उसमें इतनी नहीं होगी, आप इतना बड़ा स्टेक नहीं ले पाएंगे।
करेक्ट।
दूसरी बात कि जो कॉन्फिडेंस आपने दिखाया ये शेयर में, कम से कम 3 या 4 बार आपने कहा ये शेयर 25%, 50% नीचे आया,
या
तभी भी आपका जो एक कन्विक्शन था वो बरकरार रहा। और वो बरकरार केवल इसी बात से रहता है, फिर से एक बात दोहराऊंगा, कि आपकी स्टडी जो कंपनी के बारे में है वो इतनी स्ट्रांग है कि जो इन्वेस्टमेंट फिलॉसफी जिसके तहत आपने ये शेयर लिया वो बरकरार रही। बाकी वातावरण जरूर चेंज हो गया, पर आपकी इन्वेस्टमेंट फिलॉसफी में कोई ठेस नहीं पहुंची, तो आप बरकरार रहे। और बाकी मैजिक तो बाजार ने दिखाया। तो ये कुछ बिंदु मेरे समझ में जो आए, मैं सोचा एक बार फिर दोहरा दूं कि जो आम निवेशक है उनको फिर से एक बार ये पता चल जाए। गाने की दरखास्त कर सकता हूं कोई भी आपका पसंद, क्योंकि आपके गानों में भी एक इन्वेस्टर एजुकेशन की जिसने जो आपने बात की वो पूरी पूरी उभर के आती है। बहुत सिंपल शब्दों में, बहुत एक म्यूजिकल तरीके से आप जो चीज समझाते हैं। जो ब्रोकर बोलते हैं इन्वेस्टर को वो तो बड़ा ड्रैप सा, ड्राई सा, बोरिंग सा लगता है, पर आपके गाने के द्वारा वो वही चीज एक नए अंदाज में सुनने मिलती है। सर प्लीज।
हाँ जरूर। तो गाने के बिना तो खाना पूरा नहीं होएगा, नहीं तो मालूम पड़ा है इसका। और बराबर मैंने 17-18 गाने लिखे हैं, उसमें मैं मेरी जिंदगी का जो भी मेरे खट्टे मीठे अच्छे बुरे और उतार चढ़ाव और गरम नरम और सर्दी और गर्मी जितने भी हो सारे अनुभव उनमें डालने का चेष्टा किया। इसी बुक को वो सिंपल है। और तो मैं लोगों को यही रिक्वेस्ट करता हूँ भाई, उसको एंटरटेनमेंट के हिसाब से मस्त उनको समझने की चेष्टा कर कि इसमें मैसेज क्या है। आपको अच्छा लगे तो आप उसको इस्तेमाल करो, नहीं समझ लगे तो एंटरटेनमेंट से उनको छोड़ दो। तो अभी एक प्रोग्राम था सेबी के साथ भी किया था, वहां भी वो सब मुद्दे यही चल रहे थे, सब जगह सब सब लोग जोर शोर से रेगुलेटरी और सब लोग आप लोग सब लगे हुए हैं। तो चलिए एक गाना मैं जो अभी के माहौल के अंदर में जो चल रहा है मार्केट के अंदर में, पुराना गाना है मेरा, वो मैं सुनाता हूँ। थोड़ा पैसा जो आना शुरू हो गया, थोड़ा पैसा जो आना शुरू हो गया, मुझको लगने लगा मैं गुरु हो गया, मुझको लगने लगा मैं गुरु हो गया। कॉन्फिडेंस वो आया, बड़ा दाव लगाया, पैसा इतना डुबाया मजा आ गया, ऊपर लेता रहा नीचे बेचता रहा, कुछ समझ में न आया मजा आ गया, मेरे फ्यूचर ऑप्शन ऑलवेज दी टेंशन, तूने इतना सताया मजा आ गया।
वाह 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 वाह, फैंटास्टिक। सुरीले अंदाज में सारी चीज समझा दी। अब थोड़े एक आधे सीरियस क्वेश्चन लेते हैं सर।
हाँ प्लीज।
नए इन्वेस्टर के लिए क्या कॉमन पिटफॉल्स है जो उन्हें अवॉइड करने चाहिए? जो एक नया निवेशक आता है वो सोचता है मैं इतना % रिटर्न कमा लूंगा, क्या क्या कॉमन पिटफॉल्स उसे अवॉइड करने चाहिए?
देखिए वो मेरा एक कोड है सर कि पहला बात तो ये समझना चाहिए इन्वेस्टर्स को कि नो एकेडमिक डिग्री कैन गारंटी यू सक्सेस इन स्टॉक मार्केट। सबसे पहले तो लोगों के नोशन होता है कि मैं चार्टर्ड अकाउंटेंट हूँ या मैं एमबीए हूँ या मैं इंजीनियर हूँ या मैं बहुत पढ़ाई करके आया हूँ तो मैं यहाँ पर कुछ तोड़ डालूंगा फोड़ डालूंगा। मैं उनको एक ही बात पूछता हूँ, भैया तू बहुत बढ़िया पढ़ाई करके आया है, तू गाड़ी चला सकता है क्या? तो गाड़ी नहीं चला सकता, उसके लिए तेरे को गाड़ी चलाना सीखना पड़ेगा। तू स्विमिंग कर सकता है क्या? नहीं कर सकता, उसके लिए तेरे को स्विमिंग सीखना पड़ेगा उसको। तो हर चीज का सृष्टि के अंदर में इसी तरह का हिसाब किताब है। वॉट एवर करियर यू वॉन्ट टू परस्यू, अल्टीमेटली यू हैव टू गो थ्रू द फंडामेंटल, और उसका जो भी उसका जो नॉलेज है उसके थ्रू ही आपको जाना पड़ेगा। तो नए इन्वेस्टर को यह समझना चाहिए कि इफ यू वांट टू बी सक्सेसफुल इन स्टॉक मार्केट यू हैव टू स्टडी स्टॉक मार्केट। whatever you have studied, that is your perspective, that will help you in understanding the market, in a better way. But ultimately, you have to understand the nitty-gritty of stock market. और दूसरा मेरा लोगों को बोलने का मतलब ये है कि स्टॉक मार्केट रिवॉर्ड्स यू एज पर योर परसेप्शन. इट यू विल ट्रीट इट एज ए गैम्बलिंग, देन इट विल प्रूव ए गैम्बल फॉर यू. तो लोगों का जो गैम्बलिंग इंस्टिंक्ट होता है ना, ज्यादातर जो नए लोग आते हैं ना, वो क्या फ्यूचर ऑप्शन से पैसा कमाने के लगते हैं कि मैं ऑप्शन ले लूं या ऑप्शन बेच दूं या फ्यूचर कर लूं, और जल्दी जल्दी पैसा कमाने के अंदर में रहते हैं. तो कोई भी काम आप जल्दी से करते हो और बिना सोचे समझे बिना अगर आप करते हो, तो रास्ता भी अगर क्रॉस कर रहे हो तो डिसिप्लिन से क्रॉस कर रहे हो कि मेरे को ज़ीब्रा क्रॉसिंग पर क्रॉस करना है, बाईं तरफ मेरे को चलना है, एक डिसिप्लिन एक है. आप वहां भी अगर हड़बड़ी करोगे तो आपका एक्सीडेंट होने वाला है. तो नए आदमी जो आते हैं ना, तो यहाँ पर ये सोचते हैं ये लोग कि ये जल्दी जल्दी पैसा करोड़पति बनाने का एक साधन है ये. और इसी के अंदर में उसी दिन से, इसी सोच से, ये मानसिकता से ही उनका डाउनफॉल चालू हो जाता है उनका. ये जो मार्केट अभी जो बूम है, एवरीबॉडी एक जीनियस इन ए बुल मार्केट. मेरा एक कोट आलोक भाई, कि शेयर बाजार में क्या होता है ना, कि जब लहर चलती है ना, सबको अच्छा अच्छा दिखाई देता है. जब जब बसंत आता है ना, तो हर तरह के फूल खिल जाते हैं. तो लोगों को लगता है कि अरे भाई, तो मैं पैसा ही कमा रहा हूँ बिना जाने पहचाने, बिना बिना समझे सोचे, बिना कल ले लिया था, परसों बढ़ गया, आ गया 5,000, आ गया 50,000, आ गया 500, आ गया. अभी उसी को मेरे को आपको क्या बताऊं, होटल के CISF के सिक्योरिटी चेक वाले, होटल में जो काम करते हैं प्यून होटल के, वो शेयर बाजार के अंदर में लग गया. वो बोल रहे हैं मैंने अकाउंट खोल लिया यहाँ पे और सर मैं ट्रेडिंग करता हूँ. तो ये इतना बड़ा एक यहाँ पर ये डेंजर सिचुएशन पैदा हो गया यहाँ पर. तो लोगों को ये समझना चाहिए कि भैया, मैं हमेशा बोलता हूँ कि इन्वेस्टिंग इज लाइक मिल्किंग ए काउ एंड ट्रेडिंग इज लाइक मिल्किंग ए बुल. तो बुल में से तुम तेल किधर से निकालेगा भैया, वो रेत में से तेल निकालने का जैसा यहाँ पे. तो ये नए आदमी को समझना चाहिए. अगर इफ यू विल ट्रीट इट एज ए बिजनेस, मार्केट विल रिवॉर्ड यू एज ए बिजनेस. और बिजनेस का एक प्रोटोकॉल होता है, बिजनेस का एक डिसिप्लिन होता है, एक तरीका होता है. कोई दुकान भी खोलते हैं तो इतने दिन इतना इन्वेस्टमेंट होएगा, इतनी इन्वेंट्री होएगी, इतने खर्चे लगेंगे, इतने दिनों में ब्रेक इवन होएगा, फिर मेरे को ऐसे पैसा आएगा. इस तरह जो प्लानिंग होती है वो शेयर बाजार में कोई नहीं करता भाई. तो ये जब तक नहीं होगा तब तक यहाँ पर जैसे सेबी बोलती है 100 में से 90 आदमी खोते, मेरे को लगता है 100 में से 99 आदमी खोते. तो तब तक ये चलता रहेगा. तो जो नए इन्वेस्टर आते हैं उनको धीरे धीरे चलना चाहिए, स्टडी करना चाहिए, नहीं समझ में आए तो म्यूचुअल फंड के थ्रू इन्वेस्ट करना चाहिए, और ट्रेडिंग वेडिंग को लास्ट ऑप्शन रखना चाहिए. और ये शुरुआत अगर वो लोग अच्छी करते हैं और मार्केट में अनुभव करते हैं, एक दो बुल मार्केट, बेयर मार्केट एक देखते हैं कि यहाँ पर बेयर मार्केट में ज्यादा सबक मिलता है, बुल मार्केट में सबक नहीं मिलता है, उन सब से वो गुजरेंगे तो वो खरा सोना हो सकते हैं.
पीस ऑफ एडवाइस जो आप शुरुआत में खुद को अगर आपको पता होती तो आपका इन्वेस्टिंग करियर और भी बेटर होता, जो आज आप निवेशकों को देंगे, ऐसा एक एडवाइस जो शायद आपको आपके करियर के बिगिनिंग में पता होता, वो क्या होगा?
हाँ, तो उसका यही होता कि जो मेरा गाना है भाई, कि सोच कर समझ कर इन्वेस्ट कर, रूमर पे टिप पे न टाइम वेस्ट कर, नॉलेज और पेशेंस का बिजनेस है ये, अनुभव से सीख और बेस्ट कर. तो ये पहले आज ये लोग जो काम कर रहे हैं, मैं भी यही काम किया हूँ पहले पहले आके, और तभी मेरे को सफलता में मेरे को 20 साल के बाद में छोटी मोटी सफलता मेरे को चालू हुई. तो 20 साल तक तो मैं हैंड टू माउथ ही शेयर बाजार में रह गया. तो इसी बोलकर लोगों को मैं ये चाहता हूं कि मैंने 20 साल लगाए 100 में से 30 मार्क्स पास करने के लिए, आप तो मत लगाओ कम से कम. आप तो ज्ञान इतना आज के दिन, इतने हर चीज इंफॉर्मेशन नॉलेज और सारी चीजें आप ऐसे प्रोग्राम BBF कराती रहती है, ये तो आजकल हर साल ऐसा हो रहा है. इतना ज्ञान है कि अब आपको ये ज्ञान ज्यादा जानने की जरूरत है कि किसको पकड़े किसको छोड़े. ये ज्यादा जरूरी है कि क्या हमको नहीं सीखने का है. तो ये एक एडवांटेज है नए लोगों के लिए. तो मैं चाहता हूं कि वो ऐसी शुरुआत ना करे कि उनको एक उम्र गुजर जाए, उनको आधी उम्र खाली स्ट्रगल में गुजर जाए. तो ये उनको करना चाहिए कि नॉलेज और पेशेंस यहाँ पर रखे, और तभी यहाँ पर कुछ हो सकता है, अदरवाइज नामुमकिन है. अदरवाइज
यू सो मच विजय जी, आपने समय दिया इतनी सरल भाषा में और एंथुजियाज्म के साथ इन्वेस्टर्स को संबोधित किया, आपका गाना भी सुनाया, ज्ञान भी बांटा. थैंक यू, तहे दिल से आपका शुक्रिया. अनूप जी दो शब्द बोलेंगे.
गाने पे तो पूरा ही मार्केट चल रहा है. मैं आपको ये कहना चाहूंगा कि जो भी मिलता है मुझे मार्केट के अंदर, बोला विजय भाई का गाना जरूर सुनाइएगा, कोई ऐसा हमारे को मोटिवेट करता है। और आप इतना सुंदर तरीके से गाते हैं, आपने तो पूरा स्टूडियो बना रखा है अपने यहाँ पे। थैंक यू सो मच विजय भाई फॉर ज्वाइनिंग अस एंड
Thank
योर
you, sir.
इंस्पिरेशन टू ऑल आवर इन्वेस्टर्स। थैंक यू जी।
Thank you, sir. Thank you. Bye.
We are now Shri Vice Chairman, BSE Brokers Forum. I have great pleasure in introducing Anurag ji. Anurag ji is a rank holder and fellow member of Institute of Chartered Accountants of India and a member of Cost and Works Accountant of India. He possesses an extensive experience of over 25 years in the capital markets. He is a whole-time director of SMC Global Securities, which, along with its group companies, offers a diverse range of financial services, including institutional and retail brokerage of equity, derivatives, commodity, currency, online trading, depository services, distribution of IPOs, mutual funds, fixed deposits, bonds, insurance, broking, which is life and general both, clearing services, margin financing, investment banking, portfolio management, wealth advisory, real estate, and research. Kuch nahi choda. So with these words, I hand over the floor to Anurag Bansal.
Thank you, Alok bhai. Thank you. This was not needed. But anyway, as they say, anything that is a beginning comes to a conclusion, and so is this very engaging session, very ably moderated by you, Alok bhai.
No. Before you start, Anurag ji, I have to tell this audience that the rightful chairman of BBF is Anurag ji. I am just a front. For reasons best known to him, he has not accepted to be the chairman, and I still can't figure out why. But the official chairman of BBF is Anurag ji Bansal. I am just a face. I would like to tell this audience. And thank you, Anurag ji, for sharing your time today.
Thanks, Anup, for accepting our proposal to be chairman. So I'm ready with my official closing remarks, Alok bhai. I'll start. Good evening, ladies and gentlemen, esteemed speakers, dignitaries, and honored guests. As we draw this enriching session of the 5th edition of the BBF World Investor Week to a close, I want to express my heartfelt gratitude to all of you for your participation today. Your invaluable insights and expert perspectives have significantly enriched our discussions, paving the way for a deeper understanding of the challenges and opportunities that lie ahead in our financial markets. First and foremost, I would like to extend our heartfelt appreciation to Shri Vijayant Kumar Verma, General Manager, Office of Investor Assistance and Education, Securities and Exchange Board of India, for being our distinguished guest of honor. Your presence has added immense value to our discussions, and we are grateful for your insights and guidance, sir. I would like to offer a special acknowledgement to Nilesh Bhai, Ramdev Agrawal ji, and Dr. Vijay Kedia for their thought-provoking contributions. Their reflections on the importance of informed investing resonate profoundly, serving as a powerful reminder that knowledge is the cornerstone of successful investing. As we navigate the complexities of the market, the trust that we build among investors is paramount to fostering a robust and resilient financial ecosystem. Further, I would like to extend heartfelt thanks to Mr. Khushro Balsara, Chief Risk Officer, BSE Limited, Mr. Satish Ramanathan, Chief Investment Officer, Equity, GM Financial Asset Management Limited, Mr. Amar Ranu, Head Investments and Insights, Anand Rathi Share and Stock Brokers Limited, Mr. Ayush Agrawal, Chief Investment Officer, SMC Private Wealth, Dr. Nitin Dumasia, President and CEO, Growlity Incorporation. Your valuable contribution to the discussions on the panel topic, uncovering opportunities and managing risks for modern investors, has been truly appreciated. Your insights and expertise have enriched our discussions, and we are grateful for your presence and the knowledge you have shared with our audience. To quote the renowned investor Benjamin Graham, the individual investor should act consistently as investor and not as speculator. This timeless wisdom highlights the importance of discipline and long-term vision in investing. This mantra has been resonated throughout our discussions today. Friends, as we celebrate World Investor Week 2024, let us carry forward the valuable knowledge and insights we have gained today Together, we can cultivate an environment where investors feel confident, educated, and empowered. I sincerely thank to each one of you for your time, insights, and commitment to advancing our markets. Let us continue this journey together, nurturing a culture of investment that prioritizes education, trust, and informed decision-making. I would also like to express my official appreciation to our Master of Ceremony, Mr. Alok Churiwala, for keeping us engaged, and BSE Brokers Forum Secretariat for organizing this event and for their dedicated efforts in making the 5th edition of this session a very huge success. Thank you once again. I look forward to seeing you at our future events. Thank you, Alok. Thank you, Anubhai. And thank you, our participants.
Okay.
Thank you.
Signing
Thank you.
off. Thank you, Ujjwal. Thank you,
Thank you,
SP.
everybody.
Okay.
Thank you, Ujjwal. Thank you, SP. And thank you, Alok. Thank you, Anuragji. Everybody, thank you very much for joining.
Thank you. Bye-bye.